Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Softer data, Asian equities head for a two-month high as US jobs and inflation reports fuel optimism the Fed is near the end of hiking rates. Europe is set to open in the green. JP Morgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermes, meanwhile, also surge as shoppers snap up pricey Birkin bags. Right, let's check in on how these markets are setting themselves up for this Friday open. Futures pointing to gains then of 0.2%. For some investors, the data out of the US is looking Goldilocks in terms of their positioning. For the Fed, we're waiting, of course, for more data out of the US later today and potentially more commentary from Fed officials as well as they weigh up the potential of another hike in May. The Spanish IBEX then gaining 0.2%. The FTSE 100 currently flat at this point. There's really interesting picture across the commodities complex and FX as well. Softer US dollar, strengthening euro dollar. We'll switch it over and see how things are playing out. Again, the data out of the US, so you saw the jobs claims coming in a little higher than expected, producer prices coming off more than expected. Again, pointing maybe to an expectation that things are squaring up a little bit more positively in terms of the Fed, building, of course, on the CPI print that also came in on a headline basis, slightly softer than expected. Now, Caron over in France getting 0.3%. We'll check on Hermes as well because the luxury space continuing to drive the momentum over French equities. Let's switch it over and see how things are playing out cross-asset then, with the focus, of course, on euro-dollar, but also on the commodities trade as well. As you look to Brent, currently trading at $86 a barrel, a gain there of 0.2%. On track now, oil, for a fourth straight week of gains. In terms of gold, that is also on track for a second straight week of gains. Euro-dollar at around 110. That's currently the highest level in about a year. Again, on expectations that the ECB is going to go further with hikes and that maybe after a hike in May, you could get a pause from the Federal Reserve. Currently, euro-dollar at 110, Brent at $86 a barrel, and gold above 2,000. Futures in the US on the NASDAQ futures pointing to a little bit of downside of 0.1%, but not a big surprise given the gains that we saw, plus 2% for the NASDAQ yesterday in the US session. Here's the picture on Hermes then. The luxury space, again, getting another boost. You saw revenues coming in well above the expectations for the quarter, for the first quarter from Hermes, plus 20%. The expectations had been for a gain of about 16%. Hermes up 1.6%, saying that they had a very good Chinese New Year, and it's the Chinese demand that continues to propel these luxury stocks higher. We talked about LVMH, Hermes building on that picture. We also have some Spanish CPI breaking as well in terms of the data, just building out the picture in terms of the inflation picture in the Eurozone. We've had some commentary as well overnight from ECB officials. Spanish final March harmonized CPI rising 3.1%. That's a year-on-year basis in line with the preliminary number of 3.1%. Again, a number of ECB officials coming out overnight saying that more work needs to be done from the ECB, and some, like Holtzman, pointing to potentially another 50 basis point hike coming through from the European Central Bank. Now, as US producer prices fell in March by the most since the start of the pandemic, the index slid 0.5%. It was driven by a drop in gasoline prices. Joining me now to work through the data and these market moves is Christian Müller-Glissman, Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs. Christian, good morning. Thanks for joining us in the studio. I hope you're well. Let's start with the data then. Is this a Goldilocks picture in terms of how we think about the Fed? Can they afford to pause in May?
Yeah, I mean, we're still in a late cycle backdrop, which means we're having growth slowing, inflation slowing, and hopefully policy slowing. And the question is what slows the most and what slows first. And I think recently it looked a bit better. Labor markets have been resilient enough, but not too resilient. And at the same time, you see the inflation picture normalizing, and central banks have been priced out at least. They haven't really been as dovish yet with regards to their actions, and we still think there's more to come in terms of hikes. But certainly markets have taken the view that we're closer to peak rates. So in the very near term, I wouldn't call it Goldilocks. There's been Goldilocks momentum. We shouldn't forget that we're late cycle still. Late cycle means you cannot have a long runway for growth, and the inflation pressures, they might be a bit more sticky.
How much confidence do you get from the evolving jobs picture in the US?
I mean, it's really, our economist view has been that you get a soft landing, recession probability is around 35%. The labor market is critical for that because we expect the labor market to remain resilient, very little increase in the unemployment rate. And by virtue, you get real income growth, which starts to support the economy as broadly you're slowing down. It looks quite encouraging. You've had nearly a year where the unemployment rate has been quite low and anchored. JOLTS job openings have come down materially, so you see the labor market slowing without an increase in the unemployment rate. Even wage inflation is starting to moderate. It looks good, but we have to be careful because we learned about the US bank stress. We still know that there's a credit contraction underway. We see that in the small business surveys. We see that in the tightening lending standards, and that affects the labor market because a lot of small businesses are big employers.
And of course, we're hoping to get some clarity and some detail from the bank earnings precisely on that question of credit conditions later Friday in the US, of course. When it comes to this equity rally then, and again, the headline was we're closing in now, we're looking at potentially a 10-week high in terms of global equities in the close. Do you think it has much further to run, the rally in equities?
We are a bit skeptical on that, especially in the US. I think you've had a huge boost from yields, and the market has pulled forward a lot of that potential central bank put, which might not come because if the labor market remains strong, if the economy doesn't have a recession, the pressure on the Fed to actually cut rates by as much as what the market is pricing is quite low. The market should price cuts, that's for sure, because you're late cycle and something going wrong is more likely than not. But at the same time, 100 basis points being priced, that's probably a bit too much, which means the rates picture might at some point become a bit of a headwind again, and that doesn't help US equities.
To be clear, when you say the markets are right to price in cuts, do you mean by the end of this year, or do you want to push that out to 2024?
So in terms of market pricing, we don't expect cuts until next year. But I think in terms of market pricing, it does probably make sense for the market to price already cuts this year. Because you always have to think in probabilities. And the challenge you have right now is that if something goes wrong, the Fed actually could cut very aggressively, just like they hiked very aggressively. So just a small probability of really large cuts means that the market needs to price some cuts. And from that perspective, we actually feel that it's not completely wrong that the market does price cuts this year already.
When we look ahead to those bank earnings then that you flagged later today, what is more important for you? Is it the top line growth picture, the top line profits number, or is it the commentary from CEOs and executives around credit conditions?
I'm most concerned about asset write-downs and anything that hits confidence in the sector. So I think the problem we had with SVB was that you had an asset write-down, a capital hole that needed to be plugged, which created a huge confidence issue for that bank and broadly the small banks in the US and later some in Europe. And my concern is, are there any things on the balance sheet, any signs that you have asset write-downs which make you question the solvency and possibly trigger more liquidity problems? I think most of the bank stress metrics we're following have actually settled. So that's very encouraging. The only area that actually hasn't settled is commercial real estate. So if you do have banks, which small banks are among the largest lenders to commercial real estate, like 60 to 80% of lending to commercial real estate comes from small banks. If they are starting to feel write-downs, defaults, delinquencies hit them on their book, that could create a bit more concern again.
Okay, so the focus on asset quality and potentially the vulnerability around commercial real estate. When it comes to the commodity sector, we've seen this run up, and again, we flagged this in terms of Brent, $86 a barrel. You're looking at a fourth straight week of gains. How do you play that? Do you want exposure to energy stocks, to commodity stocks? Or is it pure play on oil itself, or is it through the FX?
Yeah, I mean, our forecast is 95 for the rest of the year. We've pushed that up now after that OPEC meeting. And what's interesting is our commodity team, they've written about this, the kind of OPEC put is starting to really show where OPEC cares about the oil price to the downside and manages that. And that makes broadly commodity-related assets, energy-related assets more investable and less risky. So to your question, I mean, normally you like to go to equities to kind of, to some extent, reduce the volatility of commodity prices, because equities are trading off the longer dated oil price, which is less volatile. But these days, we are actually overweight commodities outright in the kind of real physical space. And we do think that it has a valuable function in the portfolio, especially as you were earlier saying that a huge amount of the inflation relief in PPI and also in CPI comes from the energy side. So if the energy side now re-accelerates because of a very strong consumer, that is a key risk for your portfolio. So I think owning that directly makes sense, but we do also like the energy equity right now, and we do think broadly energy exposure is attractive.
Okay, so further gains potentially around energy equities and what's happening, particularly with the backstop of OPEC+. And of course, the inflation risks call into question just how defensive you want to be in this market. So the last question for you is, how do you allocate in a defensive way within this environment? What are your preferred strategies?
Yeah, I mean, it's a real challenge, because if you're late cycle, risk premia are usually low. Cyclicality, leverage, and all these areas, they get discounted, and they don't tend to perform until you have the trough in growth behind you. And we're not there yet. We expect growth to decelerate in the second quarter and possibly then accelerate towards the end of the year. So I think right now you want to be up in quality. The challenge you have is people are up in quality. So if you do look at high quality stocks in Europe, we call them the granolas, which is essentially like the healthy stocks, large caps, strong balance sheets, high ROEs, good cash flow. These type of stocks trade at 50% premium to the market, which is close to the GFC premium, the global financial crisis. And even if you strip out banks and energy, they're still at 30% premium. So my key worry with regards to the up in quality shift, which is something we've been advocating for a few months now, and it's right to do that at the late cycle backdrop, is people have done that. So you have to become a bit more selective, but we do still like up in quality. The style that I personally find most interesting is low volatility stocks. That is one area that has traded a bit less strong than I would expect. And if you do really go into a volatile period, it's somewhat obvious, the low volatility stocks, they will be a bit less risky.
Okay, low volatility, and I love that. The granola stocks as well, even as there is that premium, as you say, maybe still the window, still just about open to get exposure to the granola stocks, the higher quality picture in this volatile environment, in this relatively uncertain environment. Really great insights. Christian, thank you very much indeed for coming to the studio this Friday. Christian Müller-Glissman, Managing Director for Portfolio Strategy and Asset Allocation at, of course, Goldman Sachs. A headline just crossing just in the last minute or so, and this is coming through according to Chinese state media. China's defense minister to visit Russia on April the 16th to the 19th, of course, as the scrutiny continues around whether or not China and Beijing is prepared, as the US suggests, to potentially consider providing arms to Russia in its conflict against Ukraine. Of course, China has consistently said it is not providing and will not be providing arms and weaponry to either side in that conflict. We keep across that story for you as geopolitics, of course, remains front and center. Now, coming up, good news from LVMH yesterday and good news from Hermès this morning. European luxury has been benefiting from the rebound of Chinese demand, but how long can it really last? We discuss next. This is Bloomberg.
out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Happy Friday. Welcome back to the Open. We are 15 minutes into the European trading day. European stocks up 0.3%. The CAC current over in France getting 0.2%. The luxury picture a driver again for French equities. I'm going to unpack that story for you just in the next minute or so. Futures in the US, S&P E-mini is currently down 0.1%. The data out of the US, it's not Goldilocks, according to Goldman Sachs, but it is looking slightly better in terms of the Fed. Producer prices coming off more than expected, and the jobless claims ticking up somewhat, suggesting that the economy, at least the jobs picture, remains relatively stable. Let's get the stocks to watch now with Joe Easton from our equities team. Joe, what are you looking at?
That's right, Tom. So we're finally seeing a bit of relief this morning in AB InBev, the world's biggest beer maker. This following 4 days of declines amid a backlash following their partnership with the TikTok influencer Dylan Mulvaney. That's spurring fears of a boycott of Bud Light in some US states in America. However, Citigroup analysts out defending those shares today, saying it's providing an opportunity to buy, given any decline in volumes will probably be short-lived, and also it might help them attract some Gen Z drinkers to the brand. So that stock up around 1% over in Belgium today. Then we've got Dechra Pharmaceuticals absolutely rocketing after takeover talks with the Swedish private equity firm EQT. This stock was trading at around £28 yesterday. Is now up to £38 with a 37% share price jump. The pharmaceutical suits in the pet space is doing pretty well given the lockdown boom in pets, and also we did see some M&A over in Germany this year. That trend is continuing. Elsewhere over in the banking sector, we've got the US firms JP Morgan and Citigroup coming up later today, but we've also got Danske Bank with some earnings out. They're really benefiting from better than expected trading income and also the general boost from higher interest rates. They do book a bit of a credit impairment, so they're predicting some loan defaults heading into this year, but that stock is higher today. Then Hermes, as you mentioned earlier, that one following LVMH higher yesterday, up around 1.4%. Some really strong sales in China following the Chinese New Year. Also, the US a bit better than expected. That was expected to be the weak spot, but Hermes rising at 1.3% in France.
Joe Easton, no doubt your tie collection doing its work as well there. Thank you very much indeed with some of the key stocks to watch. We'll stay on the luxury space then and bring in Andrea Felsted, our Bloomberg opinion columnist, covering all things retail, consumer goods, and of course luxury, on the back of what happened with LVMH in the last few days and the rally that we saw there. And again, those Hermes earnings. Andrea, thank you very much for joining us in studio. I was getting a bit of an education this morning in terms of the difference between a Birkin bag and a Kelly from our producer Lauren. I'm not sure I've held on to that knowledge. Talk to us about the China impulse coming through for demand for luxury. It's there.
It is. That's been the big worry and the big driver. Would the Chinese come back and spend? coincide with the ending of restrictions, and it looks like they are spending. So that is a big relief to the sector. All the shares have had an amazing run since the start of this year. Hermès up about 35%, LVMH up about 30% since the start of this year, all on that expectation of Chinese demand. If that hadn't come through, it would have been a bit of a fashion faux pas for those stocks.
A fashion faux pas hasn't come through. The Chinese are back in force. What about US consumers? All this talk about recession risks, the Fed keeps hiking rates. Is there a concern that US consumers at the high end are going to have to start pulling back?
Yes, the US luxury market is weakening. We have lots of data points to show that. It is really the younger, more aspirational luxury buyer who used crypto gains, stimulus checks, stock trading gains to buy a pair of designer sneakers or a Gucci handbag over the past couple of years. Those stimulus isn't there, and so they are pulling back a bit. Now, Hermès has outperformed in the US, and really Hermès is a slightly different case. It can almost sort of dictate its own demand, because there are wait lists for those iconic bags. If you can't quite afford one of those, you can buy some Hermès makeup, you can buy a Hermès scarf. So it can really sort of dictate its own demand. So it has outperformed in the US. It should outperform there. The flip side is China. It isn't as exposed to China as some of the peers, and it has also outperformed its rivals for the last couple of years. So whether it gains as much upside in China, we'll have to wait and see.
More broadly across the luxury segment then, you've got the slowdown potentially in the US, the strength coming through from China. How does that play out, do you think, in the quarters ahead? Does it justify the rallies that we're seeing, LVMH close to a $500 billion company?
That's right. What we need China to pick up the bling baton from the US. If that goes smoothly, we get a soft landing in Europe, then that optimism is justified. But things have run up so much, there's only got to be a little wobble, a little wrinkle in that China story, and then things could be a little bit more unpredictable.
Okay, we'll keep watching then if the Chinese consumer drops, as you say, the bling baton. Love it. Thank you very much indeed. Andrea Felsted, of course, from Bloomberg Opinion, who keeps an eye on all things consumer, retail and the luxury space for us. Coming up, gold. Talking of luxury, is becoming more precious. We discuss the rising price of the yellow metal above 2,000 as things stand. That is next. This is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. 23 minutes into the European trading day, you are seeing gains still of around 0.4% across European stocks. Futures in the US are currently flat. Brent trading at, $85 a barrel, just down 0.3%. But oil is still heading for a fourth straight week of gains, supported by signs of a tightening global market and the weaker US dollar. The greenback taking another leg lower this morning. This after OPEC Plus cut supplies, leading to brisk buying in both Europe and Asia. Joining us for the details is Bloomberg's energy and commodities editor, Will Kennedy. Will, is the momentum going to be sustained? What is the bigger driver now of this rally that we've seen? Is it all about OPEC Plus, or is it China coming to the fore? What is underpinning this?
I think mostly OPEC Plus. We're sort of 10 days on from that very surprise cut of more than 1 million barrels a day that they made, which completely took the market by surprise and has really underpinned this rally that we've seen. And you mentioned that that's followed through into the physical market quite clearly, with refiners in both Asia and Europe looking to secure cargoes to make sure that they have enough oil to meet their needs in the coming months. So it's really changed the market dynamic compared with earlier in the spring, when people were very worried about the potential impact of the banking crisis and a slowdown in the economy, and maybe we're oversupplied. I think that the OPEC cut has done what Saudi Arabia and its allies wanted it to do, which is really change the narrative and the underlying momentum.
And what is the China component at this point? That's something that Goldman Sachs points to consistently in their price targets. They got $95 a barrel by the year end on Brent, China being key to that. Are we seeing the demand and the buying coming through?
Slightly mixed signals. Yes, so far we have seen a lot of demand from China. And if you talk to Saudi Aramco, who sell a lot of oil, they will say that demand has held up very, very well, and they haven't seen any slowing down. But there are a few signs, if you look at the end demand in terms of what refineries are doing and diesel demand, that there may be a little bit of softness in the economy. So I think it is a pretty strong picture, but it's not 100% clear that it's entirely bullish.
And that's the risk, isn't it, is the economic slowdown. Maybe not in China necessarily, but certainly in the US and Europe, and maybe then that pulls prices lower. Is there also a response that we're expecting to see from the US, or are they done in terms of releasing more reserves onto the market? Because this is obviously a concern in terms of gasoline prices.
Yeah, that's right. But I think so far they have sought to underplay. They've dialed back the rhetoric that we saw last year about how this was an aggressive move by the Saudis. It's been a much more muted response this time. Obviously, they're not particularly happy about it, but I think it reflects two things. One, that there's not an awful lot they can actually do about it. Saudi Arabia is determined to pursue the course it wants to pursue, to assert its independence, to assert its weight in the oil market, and the US is working out that it has to live with that. And second, I think the US analysis is ultimately the headline figure is probably more than the actual figure of barrels that will leave the market, and the market impact may not be as great as some people think. We'll see.
Will Kennedy, thank you very much indeed. Senior Executive Editor, of course, for Bloomberg, for energy and commodities. Coming up, it is earnings season for the US big banks. We're going to get a preview, just how they've weathered that banking turmoil. That is up next. The markets currently in Europe gaining 0.4%. US futures flat. Stay with us. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that?
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so?
15, well, these days longer, so often 15, often the tail extends out to 20 years, because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Digital Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Softer data, global stocks head for a 10-week high. That's as US jobs and inflation reports fuel some optimism that the Fed is near the end of hiking rates. JP Morgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermes also surge as shoppers snap up pricey Birkin bags. Let's check in on these markets. The CAC getting a bit of a boost again from Hermes. The last time I checked, that stock was up 1%. But again, LVMH was a strength for the CAC yesterday. Across the benchmark here in Europe, gains of 0.4%. So the data picture that is being formed out of the US suggests maybe this is a bit of a sweet spot for investors. And certainly, if you look at the performance of the NASDAQ yesterday on Wall Street, gains of more than 2%, it suggests that investors are certainly locking on to the idea that maybe the Fed, if it does indeed go higher in May, can certainly consider a pause. In Germany, the DAX currently gaining 0.5%. The FTSE 100 here in the UK up 17 points, trading at 7,860. We'll check in on how these sectors are playing out then in the session today, as investors remain modestly risk-on. Again, the headline that we're looking at the highest close for global stocks, if things continue, in about 10 weeks. Softer dollar is certainly a play there as well, and benefiting a number of these stocks. We focus, of course, on the earnings picture with the bank earnings later today. The focus on Wells Fargo, Citigroup, and of course, JP Morgan. Questions about credit stability, credit markets. Real estate is top of the list when it comes to your sectors, gaining 2% so far in the session. 3 sectors in the red. Insurance at the bottom of the list, down 0.9%. Travel and leisure also lower, as is energy, flat, as Brent currently trading at $85 a barrel, down 0.2%. Of course, the context is that Brent is still on track for a 4th straight week of gains. Now, the ECB policy tightening chorus grew louder as Joachim Nagel, Robert Holtzman and Martins Kazaks all weighed in. The Governing Council members all cited the need for more action, with scope for an increase of either 25 or 50 basis points when they meet in May. Let's bring in Bloomberg's Markets Managing Editor, Christine Aquino, for the take on this and how to assess what we've been hearing from the ECB. Christine, is the divergence between the ECB and the Fed a risk for those officials? Can the ECB be the outlier amongst these central banks now?
Yeah, I think there's definitely potential for that, Tom, because, you know, the ECB was the laggard when it comes to kickstarting this rate hiking cycle. They're definitely way behind BOE, definitely way behind the Fed. And so now I think it might present them with an opportunity, right? Because we're hearing now a bit more of a signal from the Fed that, oh, maybe they might consider a pause after May. Meanwhile, the ECB, the hawks are roaring, they're ready to go. So we could potentially see a situation where the ECB goes it alone beyond May and delivers a few more tightening cycles before they pause, while the Fed is within its pausing period. And so it could be a very interesting summer, just taking a look at the opportunity that the ECB has here to maybe catch up with some of the other global central banks in terms of tightening.
And arguably, the opportunity for investors to take advantage of that divergence as well. You're seeing euro-dollar currently at 110, gaining 0.2% in the session. It is the highest level in about a year for the single currency. Talk to us about the FX impact, or at least the concern, how much focus the ECB is going to have on the single currency as they lead up to this next decision.
Well, the currency, of course, particularly a good point of focus for the ECB. And previously, they were concerned about too much strength. But I think in this case, that euro strength is probably going to help them when it comes to that controlling that inflation impact. And so it does a little bit of the work for them that they won't have to deliver in terms of rate hikes. But anyway, I think that also could potentially be interesting for them, just kind of looking at the divergence between euro and the dollar. I think this, again, plays back into expectations that could be diverging for the Fed and the ECB, right? I think we're still seeing rate cuts being priced for the Fed by the end of this year. And there's just general conclusion that the era of dollar strength that we saw last year much of it is already behind us now. And again, an opportunity for the ECB to do a little bit of work in boosting its currency and then letting its currency do some of the work for them in terms of controlling inflation.
And you talked, of course, about the need for the ECB to play catch-up with the Fed in terms of the hiking cycle. There's the policy misstep risk, isn't there? I mean, we got that reminder, obviously, with the banking crisis. We had Christian Muller-Glissman of Goldman Sachs on earlier in the show saying, look, commercial real estate is a risk. He was really flagging what's happening in the US, but potentially it's a risk here as well in Europe.
Absolutely, Tom. I mean, in Europe, the situation is that the exposure of European banks to commercial real estate is immense. They're sitting on more than €1 trillion worth of real estate loans at the moment. And so it really has this potential to be a powder keg, particularly for European banks and the European financial system as a whole. So definitely something that the ECB will want to watch out for. I mean, part of this, of course, is a result of the tightening that we've already seen from the ECB. And so if more tightening pushes a lot of these companies further to the brink of defaulting on a bunch of loans and perhaps even bankruptcies and liquidations, then that could be a big problem for the ECB. Something definitely that they would want to watch out for.
Okay, our markets reporter Valerie Setel reminding us as well that the ECB only ended QE in March as well in terms of the context around liquidity. Christina Kino, thank you very much indeed, of course, from our markets team on the commentary from the ECB officials and where it leaves that central bank, of course, as they weigh up the inflation risks and recession risks, of course, folding in a view on euro dollar. Let's get the view now, at least the roundup of the first word news with Sam Leotin. Sam.
Tom, the FBI has arrested a 21-year-old Air National Guardsman for the leak of a highly classified set of documents. Attorney General Merrick Garland says Jack Teixeira will be charged with the unauthorized removal, retention and transmission of national defense information. The New York Times reports Teixeira was the leader of a gaming chat group where the documents first appeared. And a health analytics firm is warning there's a more than 1 in 4 chance a pandemic as deadly as COVID-19 could hit the world within the next decade. Airfinity says climate change, growth in international travel, and the threat posed by zoonotic diseases are all contributing to the risk. And Brazil's president is calling on BRICS nations to come up with an alternative currency to replace the dollar in foreign trade. Lula da Silva's remarks come ahead of a meeting with Chinese President Xi Jinping today. Brazil and China have taken steps to make it easier to settle their foreign trade operations in yuan or reals. And Ferrovial has won backing for its plan to fold its parent company into its Dutch unit, paving the way to move its headquarters to Amsterdam and eventually pursue a US share listing. Shareholders of the Spanish builder agreed the plan at its AGM in Madrid. The move has infuriated the government of Prime Minister Pedro Sanchez. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg. Tom.
Sam Etienne here in London. Thank you. Now, US banks kicking off this earnings season later today. JP Morgan, Citi, and Wells Fargo all due to report later. Investors are, of course, laser focused on deposit flows. That's as investors continue to digest the global banking turmoil. It is arguably one of the more important earnings seasons for this banking sector. Let's bring in some analysis then and bring in Finance Executive Editor Michael Moore, who of course will be watching this with an eagle eye along with the team. Michael, what is going to be the focus for you, the team and investors?
I think the biggest thing will be the deposit numbers. It's kind of this trade-off of what wins out between the flight to safety to the biggest banks and the search for yield among depositors. So, you know, the fact that money markets are offering much better rates than these savings accounts, will that offset this flight to quality we saw from some of the smaller banks to the bigger banks? Analysts are expecting deposits to be down yet again for the biggest banks, and that's weighed on them the last few quarters. But how stark that is will be the big question.
Do we have any sense as to whether or not they're going to have to make the move to raise deposit rates for their customers to offset that flow to the money markets? Are we expecting any commentary on that from executives?
We are. We heard that last quarter. They've started to make those moves. They've started inching up rates a little bit, but not at the pace that we've seen in other areas. So whether they'll feel pressure to continue that will be a big question, and what that means to their overall interest expense, because, you know, deposits have been free money for the last decade.
Just very briefly, Michael, investment banking operations, they coming back in any way?
Not so far. It seems to be quite quiet, and even trading, which held up pretty well last year, is expected to be down from last year. So I think, you know, they're not going to get the lift from the Wall Street operations that they've seen in past quarters.
Michael Moore, really appreciate it. Thank you. And, of course, our executive editor around finance, Michael, and the team will be focused in on those bank earnings out later today. Now, a key ruling on France's pension age reforms takes place today. Oh, the controversy around these measures. That's after opponents took to the streets and stormed LVMH's headquarters. That was yesterday. That story is next. This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. This week, surveillance is live from Washington, D.C. as part of Bloomberg's extended daily coverage of the World Bank Group and International Monetary Fund's spring meetings.
These meetings, even with the banking crisis in place, are really, really important.
Economic outlook, poverty eradication, aid effectiveness, and more.
How slow could global growth get?
You could have a global recession.
Live coverage throughout the day continues all week on Bloomberg, your global business authority.
We still have tight labor markets. Consumption spending is still holding up. But that said, the balance of risks are squarely to the downside.
We cannot turn our back on China. China is a very important trading partner, an economic partner. It is a very important creditor to low-income countries and highly indebted countries. We cannot just ignore China.
There's a lot of different conversations going around here, both about big picture issues like climate change, but also geopolitical issues. And so, for me, that always remains the biggest risk to New Zealand.
The sooner we address some of the major imbalances through monetary and fiscal policy, the better it would be for the recovery of the economy later.
I'm confident we will get inflation back to where we want it to be, but it's a project and a task that we all have to play our part in.
Okay, Bloomberg TV guest there at the IMF spring meetings speaking about the state of the global economy. Welcome back to the Open. We are now 45 minutes into the European trading day. Their gains continue to hold across European stocks, close to 0.4%. Some data optimism coming through from the US. We focus in, of course, on the debate around where the Fed goes next. Further data out expected today. And, of course, the earnings season around the banking sector. US currently futures flat. You've got a softer US dollar as well. Brent is coming off a little bit, but it's still at $85 a barrel. Let's get to the politics of France then, because the CAC 40 is gaining, but French politics are still a challenge. France's Constitutional Council will review President Emmanuel Macron's controversial pension reform today. This after opponents of the president's plans took to the streets and stormed the headquarters of LVMH yesterday. Joining us now is Bloomberg's Caroline Connin in Paris. Caroline, what exactly then is at stake today?
Tom, I've never seen a decision by the Constitutional Council so scrutinized, so much at the heart of the political debate in France. Today, they will rule on two things. One, of course, the entire pension reform, and second, also the possibility of a referendum further down the line on this reform that will then start a process requiring a signature of 10% of the French electorate. That's nearly 5 million people. It is unlikely that the Council will reject the entire reform unless they argue that the debates in Parliament were cut off by the use of this decree to bypass a vote in Parliament. That would be against the principle of sincerity and clarity of the French Constitution. The most likely scenario, however, is that they reject parts of the reform, for example, this senior index, where they would force a company to publish the numbers of people over 55 years old that they employ. That could actually be censured by the Council today. As you can see on these pictures, some tensions around the Constitutional Council yesterday. Today, it's been barricaded, and all protests around it have been banned.
Okay, you talk about the protests, Caroline. Are they continuing more broadly across France?
Yes, and LVMH headquarters on the very fancy Avenue Montaigne yesterday was stormed by some railway workers who actually argued that instead of doing a pension reform, instead of raising the retirement age from 62 to 64, you should tax the rich, you should tax the wealthy. So yesterday was the 12th day of general strike in France. We could see more protests after the Constitutional Council decision if it doesn't go in the way of the unions. But of course, if the Council approves that entire reform, then that would make it harder for unions to protest in the future. One more strike is planned on May 1st, but that is a traditional Labor Day protest.
Okay, and you frame this as an outlier in terms of the likelihood of the Constitutional Council rejecting this outright, the reform. But if they do that, what would the implications be for President Macron?
It would be, of course, a total disaster for Emmanuel Macron because he's been elected on this reform and he would have to basically start from scratch on this entire pension reform. And this could, of course, impact public finances in the long term. This would, of course, have a huge impact as well on the Prime Minister, Elizabeth Borne, whose future is very uncertain. She was supposed to travel to Canada this week, but of course she stayed in France because of all these domestic challenges. So a lot of consequences because, of course, a vast majority of the French still think that this reform is useless and unnecessary.
Okay, Caroline Gonard in Paris on the importance of that Constitutional Court ruling. Thank you. Now, coming up, a 21-year-old, yes, 21-year-old US Air National Guardsman has been arrested, you're seeing the pictures now, over the leak of classified documents. We'll get the details on that story. That is next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open. We are 51 minutes into the European trading day. Gains of 0.4% across the European benchmark. The data coming through from the US on jobless claims picking up slightly, and producer prices coming in quite significantly below the estimates, really adding ballast to the view that the Fed is now in a position to consider a pause. The timing, of course, remains very much up for debate. The futures in the US are currently flat across your sectors here in Europe. Top of the list, real estate, despite the concerns that have been flagged around commercial real estate and the linkages to the banking sector. Real estate today gaining 2%. Two sectors in the red, insurance down 1.2%, energy off by 0.2%. There's the context here. Brent at $85 a barrel is down by 0.3%, but it is still on track for a fourth straight week of gains for oil following that OPEC plus surprise cut to production. Let's take a look now at what some of the other things are coming up in terms of the calendar and the market's diary. later today. 1:30 p.m. UK time, we're going to get insight into demand for US goods and services when retail sales data for March is published. So a picture there on the health of the consumer. At 1:45 p.m., Fed Governor Christopher Waller is going to speak and take questions at an event in Florida. Really interesting, given that we have seen this debate emerge now amongst Fed officials as to whether or not, in fact, they could indeed just hold in May. We'll see if Waller adds to that commentary. At 3 p.m. UK time, we're going to get the latest University of Michigan Consumer Sentiment Survey results from the US, again, building out the picture in terms of the views on inflation. And later today, some of the big US banks, of course, due to report, with JP Morgan Chase, Wells Fargo, and Citigroup all set to announce first quarter earnings with a focus on credit conditions and asset quality. Now, to the politics of the US, but particularly this remarkable and historic leak that we've seen. A 21-year-old US Air National Guardsman has been arrested over the leak of classified intelligence. The picture's there for you on the screen. The documents include maps, confidential reports, and a US assessment of Russia's war in Ukraine. Let's get the latest, the details then, with, of course, Mark Champion, our international editor and reporter. Mark, thanks for joining us on set for this. The implications, I mean, it's remarkable. 21 years old, and yet access to this highly classified and secret documents and intelligence within the Pentagon. What do we know about the arrest and where the US is in terms of tying up the knots on this?
Well, I mean, you know, he was arrested soon after they established that he was the moderator on a chat in a games room, video games. It is quite extraordinary. It's not clear, you know, it will be a while before we know for sure, you know, what exactly happened, why he did it, etc. But he basically put these documents into a chat room for games, for video games. The kids, literally kids, 17-year-olds, 16-year-olds who were in the chat room, you know, were the audience. It was quite limited. It's not clear whether he ever intended it to go beyond that, or whether there's something else going on. You know, it'll take a little while to figure that out, but it is extraordinarily embarrassing for the United States.
What does it say about the response? What do we expect to see in terms of the way they change the handling of these secret documents?
Well, you know, he was at kind of a node in the intelligence gathering and distribution for the Air Force. And, you know, he was a kind of IT-level guy, so he had to have security clearance in order to deal with that. The question, I think, really is going to be, you know, why did he have access to these kinds of documents? It's not clear why they would have had to pass through his hands. So it may be that the issue is going to be compartmentalization, you know, need to know, and to really sort of crack down on that. And really a review of the sort of widening of security clearances that began after 9/11, when, you know, the aim, the feeling was that the intelligence community was too siloed, hadn't been speaking to each other, and that's you know, one of the problems that arose around 9/11. So there were a number of changes then. It may be that the pendulum on that needs to swing back.
Yeah, and we know that the head, the defense secretary, of course, is looking into reviewing the security infrastructure, at least the way that they handle this documentation. Mark Champion, of course, our international affairs reporter, thank you very much indeed on the back of that arrest and the latest around that intelligence leak. Let's briefly check in on these markets then. European equities currently holding on to gains of 0.4%. We've been talking about commodities and oil, but the gold story's at play as well. Gains of 1%, holding above $2,000 US. Softer dollar certainly helps with the yellow metal, but it is now set for its second weekly increase. How much further can gold go above 2,000 is going to be a question, of course, the hedging effects, but certainly around softer dollar. That's it for the European market open. There is plenty more coming up. Surveillance Early Edition. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Softer data. Global stocks head for a 10-week high. That's as US jobs and inflation reports fuel optimism the Fed is near the end of hiking rates. JP Morgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermes also surge as shoppers snap up pricey Birkin bags. There is a redhead crossing the terminal right now around OPEC+. I'm just going to get that for you because, of course, we focused in on what's happening with the oil price and the moves higher. OPEC+ cuts intensify the, quote, siege on oil consumers. This is a warning from the International Energy Agency, the IEA. This is a redhead crossing the terminal. OPEC+ cuts intensify what they are describing as the siege on oil consumers. Of course, this following that surprise cut by OPEC+ that has led oil higher and aiming now for its fourth straight week of gains. Brent currently trading at $85 a barrel, just down 0.5%. We'll keep across these lines from the IEA if we get any more coming through. Of course, there's concerns about the inflationary impacts of this move, even as OPEC+, of course, for their own reasons and their own budgetary reasons, want to see oil of at least $80 a barrel. Goldman Sachs, by the way, they have a price forecast on Brent of $95 a barrel by year end. But certainly for the US and others, it's the inflationary impact and the cost on gasoline prices that is a concern. Let's check in on these markets then as investors weigh up what is looking like and has been characterized, at least by some, as a sweet spot in terms of the data coming through from the US. Yes, jobless claims picked up a little bit, but there's certainly stability in the jobs markets. Producer prices, though, really came in sharply low. We're going to get the details from Bradley Titel in just a moment, but certainly the investor reaction yesterday was positive, and the follow-through for European equities is being held as well. The Nasdaq ended the day up 2%. Luxury and the earnings picture continues to support. We're getting banking earnings out later today. Here's the luxury picture then, with Hermes building on the gains that we saw from LVMH. LVMH now nearing a $500 billion company. Hermes also posting revenues for the first quarter much higher than expected. The estimates were for 16% increase in the first quarter. They came in at about 23%, and they talked, executives, about having essentially a sterling Chinese New Year. And it is the Chinese consumer that is all powerful now for the luxury space. And the read across more broadly across that sector. LVMH continuing the gains, 0.7%. Now, we touched on this. US producer prices fell in March by the most since the start of the pandemic. The jobs data also slightly softer than expected. Let's bring in our markets reporter, Valerie Teitel, then, for the detail and the analysis. How did the markets trade these numbers? Was it a big surprise?
Look, yesterday was very much a soft landing trade. It was a risk-on trade after these numbers. As you mentioned, PPI came in weak. It fell the most since the start of the pandemic. The month-on-month number down 0.5%. The consensus was for a flat reading, so it really was a lot lower than expected. And then those jobless claim figures you mentioned, yes, they ticked up, but it was mostly expected and mostly came due from California, and that's based on the tech layoffs that we know about months ago. So the job market seems stable. Inflation seems to not be surprising on the upside anymore. That's a good signal for the Fed, a good signal for the soft landing, and we were risk on yesterday. The dollar weakened broadly versus other currencies, and equities rose. As you mentioned, the NASDAQ was up 2%. The euro also hit a high for the year on that dollar weekend.
Yeah, 110 on euro dollar. And of course, we're going to be scrutinizing the bank earnings out later today, and that ties in, of course, to the Fed support that's come through. Is the Fed still the backstop for this beleaguered banking sector, or are they able to walk back some of that support?
Look, we got the weekly balance sheet data from the Fed, and it showed that the emergency lending that the Fed does has fallen now for 4 straight weeks. And their new lending facility, the BTFP facility, had its first week of falls. So it's looking like this is another sign that the banking sector is stabilizing. It's not getting any worse. The other thing we had out yesterday was flows into money markets. As we know, the money market flows have been rampant in the past few weeks, accelerated by the banking turmoil, but they are starting to slow. That is yet another sign that the deposit flight that a lot of these small banks are suffering from is starting to stabilize.
Valerie Teitel, thank you very much indeed. From our markets team, of course, scrutinizing the data that came out of the US and the read across for the Fed and that support for the banking sector. Let's bring in now Shamala Wheeler, Chief Economist, Whelan, I should say, Chief Economist at Westbourne Research Services. Shamila, thank you for joining us this Friday. Is this the sweet spot then for the Fed and for investors?
Let's put it this way, it is a sweet spot for the moment, or rather you could call it also the calm before the storm.
What is the storm?
That we are headed for a downturn. I think the only 2 questions are, is it going to be a short and sharp one, or is it going to be a grinding and prolonged one? Because what is clear is the global economy is slowing. It's going to get worse as the US and Europe slip into recession and as the Chinese reopening boom peters out.
And so on the balance of risks, where do you land on that then? Is it short and shallow, or is it going to be deep and prolonged? There's a lot of uncertainty, I know, but where would you edge at this point?
Ooh, good question, Tom. I would edge towards grinding and prolonged, simply because I think the Fed, even though neither the Fed nor the ECB has won the inflation battle, they are not going to hesitate to continue raising interest rates, and it's just another 25 basis points.
Okay, and part of that battle is around core inflation. Do you have any clarity on when we can start to see significant and sustained breakdown in core inflation? How long is that going to take?
That is the million-dollar question, and I think it's going to take a while. So my view has been for the last 2 years that we are never going back to pre-COVID inflation rates. Inflation for the next sustained period will be 4 to 5%, and it boils down to not even just core inflation; it's about the amount of liquidity that's in the system, right? The Fed's balance sheet is about 101% larger than on the eve of the pandemic, and this was before SVB and Signature, and now half of the contraction since April last year in the balance sheet has been reversed. And even before that, Bank of Japan was increasing its balance sheet. So if you take the Fed, the ECB, and the Fed together, sorry, the ECB, the Fed, and the Bank of Japan together, they've added over $400 billion through their asset purchases since December.
Just since December? 400 billion plus. That is remarkable. It's huge, and the support is there, clearly, in terms of liquidity. But there is also the scrutiny on credit conditions and tighter loan conditions for the banking sector. And clearly, we're going to be listening out to the executives and banks later today on that. To what extent do you, again, have a clear steer on how much work has been done on that front, how much work the banking crisis and those tighter credit conditions have done for the Fed?
Well, I think it's a bit of a moving feast, right? It's a given that, lending standards are going to be tightening, banks are going to be reluctant to lend, the whole credit market is going to be tightening, and that is a knock-on effect on households and on companies at a time when the cost of servicing existing debt has already gone up.
Tell us why you're so bearish on the outlook for China. The exports came in higher than expected. Yep. The consumer is clearly, at least at the high end, supporting the luxury space. We had the PBOC Governor Yi Gang coming out later or earlier this morning saying that things are looking a little bit better in real estate. And you say that you're already starting to look at a fade of the reopening play for China.
So, Tom, don't get me wrong. This year is looking good, right? Okay. We've got the reopening boom. We've got, if you look at the macro policy stance, fiscal policy is easy, monetary policy, easy. Inflation is extremely low, which means, you're not getting by a long shot, any kind of hit to real purchasing power like you're getting here in the West. But the underlying problems of the Chinese economy hasn't gone away, right? There's still the debt problem, especially in the corporate sector and the real estate sector. There's still problems in the property market. And the biggest one is that, quite simply, the geopolitical tensions and the tech war and the US tightening the screws there. And that's what makes me bearish about China.
And that's taking us through to 2024 and beyond rather than specifically this year. There was always the concern that China would produce an inflationary impact as well as supporting the economy of Europe. We've heard from ECB officials just over the last 24 hours, again, reiterating the determination, at least amongst the hawks, to raise again. What are the risks? Can the ECB, how much higher can the ECB go? Does the slightly softer China give them scope to go higher on rates?
Not really, because the ECB's got the same problem as the Fed, which is excess liquidity. And if you believe, like me, that inflation is always and everywhere a monetary phenomenon, price will be the accelerating factor between supply and demand. They've got the liquidity there, right? And the biggest problem is core inflation. And they're not going to get core inflation down just through China imports.
So what do they need? Another 50 basis points and stop? Or do they need
I think because it's going to become a trade-off between inflation and growth, they're going to accept higher inflation rather than sacrifice growth and try to achieve that soft landing that everybody's talking about, which I think is going to prove quite elusive. So another 25 basis points out of the ECB, 50 max, but I'm more veering towards 25.
25 probably from the ECB, and then they have to accept this higher inflationary picture that you've outlined for us. Shamila, thank you very much indeed. Thanks for joining us in the studio to walk through some of these key issues affecting these markets and breaking down the future in terms of the outlook for the global economy. Shamila Whelan, Chief Economist at Westbourne Research Services. Coming up, the FBI has a suspect in custody for the massive leak of classified documents. We bring you more on what we know so far in that dramatic story. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019, say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah.
And so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Balance is live from Washington, D.C. as part of Bloomberg's extended daily coverage of the World Bank Group and International Monetary Fund's spring meetings.
These meetings, even with the banking crisis in place, are really, really important.
Economic outlook, poverty eradication, aid effectiveness, and more.
How slow could global growth get?
You could have a global recession.
Live coverage throughout the day continues all week on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Now, to the story of a 21-year-old US Air National Guardsman, 21, arrested over the massive leak of classified documents. There are the pictures on the screen. Officials have said those files include maps, intelligence updates, and the assessment, and timely assessment, of Russia's war in Ukraine. Let's get the details then from Bloomberg's senior reporter for international affairs, Mark Champion. Mark, what do we know then so far about the alleged leaker?
So, as you said, he's 21, which is extraordinary. He was a National Guardsman in Massachusetts, quite low level. He needed security clearance because he was at a kind of node for the collection and distribution of intelligence, real-time intelligence for the Air Force. And yet, what is absolutely extraordinary is that he had access to these really high-level sets of documents that were at policy level and designed for the, the Joint Chiefs of the Staff. So, there's going to be some questions to answer there. He leaked them onto a chat room for, video games, a group that he knew quite well. So what his motivation is, and who else might have been involved, these are the kinds of questions that they will be trying to investigate.
Yeah, we still don't know, do we? I mean, speculation previously as to whether the Russians were involved in this. It seems, at least on the surface, that this guy was not a Russian asset. And again, the investigation continues, but it could just be that the kid was trying to get attention in his gaming group online, which is kind of remarkable.
On the face of it, that is what happened.
Right.
They will have to investigate to try and figure out if anything else did go on. There's also, there was a first moment when the documents were leaked, then the documents moved on to other sites, and at some point, some of them were doctored. So there may be different layers, where different people got involved.
So what is the response? What's the likely response from the Pentagon, from intelligence officials to close down some of these gaps, seal off these leaks? What kind of questions does it raise about the way that the US handles not only their intelligence, but the intelligence of their foreign partners, allies, and adversaries?
Absolutely. I mean, it's not the first, rodeo for the Pentagon when it comes to these kinds of leaks and the embarrassment. You remember the Snowden affair. What exactly they'll do, whether they can be more effective than they were last time, is not quite clear. But it clearly does raise questions about the compartmentalization of intelligence. It shouldn't be too shocking that someone fairly young in the military did have clearance to do that kind of job. But what did his clearance allow him to see? And I think that will be the question that's asked.
Okay, Bloomberg's Mark Champion, thank you very much indeed for the latest on that leak story and the implications for the Pentagon and the intelligence apparatus of the US. Now, coming up, slightly switching focus, shares of Hermes higher today after it posted a beat on sales this morning. That's after yesterday's stellar earnings, of course, from their rival LVMH. But can the momentum last? And to what extent is China and Chinese consumer demand the pillar for luxury going forward? This is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Our expectation is that inflation will be conquered over time. It's not going to happen immediately, but if you go into 2024, you're going to see inflation around the world getting much closer to central bank targets.
I believe we can get inflation under control, but I don't underestimate the challenge because just as in the United States and the EU, core inflation, underlying inflation, is still between 4% and 6%. So there's still a lot of work to do.
We all expect that the reduction in energy prices and other input prices will pass through to retail prices in the coming months. We will have surely volatility in this part of the year, but I think the level of inflation will be much lower than last year's, and that trend is confirmed in discussions we're having here.
Some of the key voices then from our coverage of the IMF meetings this week, with a particular focus there on inflation. Let's get the Bloomberg First Word News now with Leanne Gerrans. Leanne.
Hi, Tom. A health analytics firm is warning there's a more than 1 in 4 chance a pandemic as deadly as COVID-19 could hit the world within the next decade. Airfinity says climate change, growth in international travel, and the threat posed by zoonotic diseases are all contributing to the risk. Now, Brazil's president is calling on BRICS nations to come up with an alternative currency to replace the dollar in foreign trade. Lula da Silva's remarks come ahead of a meeting with Chinese President Xi Jinping today. Brazil and China have taken steps to make it easier to settle their foreign trade operations in yuan and reals. The French government says around 380,000 people took part in a 12th day of protest against President Emmanuel Macron's pension reform plans. Protester numbers from sectors including transport were lower than last week, with the Paris Metro and international train services like Eurostar operating almost normally. France's Constitutional Council will issue a ruling on that law this evening. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Tom.
Okay, Leanne, thank you very much indeed. Just checking the price and the stock action around Hermes, gains of around 1%. So gaining today after, of course, reporting a 23% jump in first quarter revenue. That was versus the estimates of about 16%. The maker of Birkin and Kelly bags says it had, quote, a very good Chinese New Year and outperformed its rivals there in the final 3 months of last year. Let's bring in Andrea Felsted now, our Bloomberg opinion columnist covering consumer goods and the retail industry and the luxury space. Andrea, thank you very much for joining us in the studio. What is going on? Can the momentum that's coming through from China be sustained for these luxury goods makers?
That is the question. So far, so good. LVMH said the other day that the demand, it wasn't frantic, it wasn't excessive. that indicates that it's sustainable and it's gradually improving. That is what is needed to justify the optimism that's reflected in the share prices.
So it could be sustained because there's some pent-up demand, arguably, from those Chinese consumers. On the flip side, is the US looking vulnerable?
Yes. All the data points indicate that the US is slowing. Now, it's really been the US that has been one of the key drivers for luxury over the last couple of years, while those Chinese consumers have either been restricted or more cautious. What we need is China to pick up the bling baton from the US, because the US is slowing, and it's really those younger, more aspirational shoppers that perhaps had crypto gains, stock market gains, stimulus checks, and they spent those on designer sneakers, Gucci handbags. Those inputs aren't coming through, so they are reining in their purchases slightly.
We talked about the Birkin bag, and they sometimes, the price to like tens of thousands of dollars. What is the breakdown in the luxury space? Is it the slightly more quote-unquote affordable luxury that's powering these gains, or is it the top end stuff?
No, it's really the top end. In more uncertain times, you have a flight to quality. What has also happened is over the past 3 years, the biggest brands, the most high-profile brands have got stronger. Louis Vuitton, Dior, Chanel, Hermes, they've all got stronger despite increasing the prices. It's those secondary names, although Prada has had a great run, young people are discovering Prada, but it is those bigger brands. So you might buy 2 handbags a year. You might buy a Louis Vuitton and a Burberry. Things are a little bit tighter, so you just buy 1 bag a year, but you buy the Louis Vuitton and you perhaps spend a little bit more on the Louis Vuitton. You don't buy the Burberry. That's what we will see.
Okay, Andrea Felstead, thank you very much indeed, breaking down in granular detail there what is happening across the luxury space. Let's check in on these markets. Luxury, of course, is a component there, and the CAC 40 has been a clear beneficiary on the back of what's happening with LVMH and Hermes. The CAC currently up 0.2%. More broadly across European equities, you're actually seeing now again holding up of 0.3% this Friday. Of course, the data picture coming out of the US supportive in terms of the view that the Fed now can consider a pause. The futures in the US, though, edging down by 0.2% for the NASDAQ futures, but that's in the context of a 2% gain for that tech-heavy index yesterday. The Bloomberg Dollar Index slightly softer. The Euro Dollar 110, the highest level in about a year. Stay with us. US banks next. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
DOJ or other authorities
could face bigger challenges.
next. Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Softer data, global stocks head for a 10-week high as US jobs and inflation reports fuel optimism. The Fed is near the end of hiking rates. JP Morgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermès also surge as shoppers snap up pricey Birkin bags. Good morning and welcome to Bloomberg's Earnings Early Edition. I'm Tom McKenzie in London. Now, 3 of the big US banks do kick off earnings season later today. JP Morgan, Citi and Wells Fargo are all due to report. There will be, of course, a big focus on deposit outflows as investors continue to digest the global banking turmoil. Let's bring in then the expertise of Susanna Streeter, Senior Analyst at Hargreaves Lansdown. Susanna, good morning. Happy Friday. Thanks for joining us. Where is your focus going to be on what is arguably one of the more interesting earnings quarters for this banking sector?
Well, it certainly is going to be interesting because the expectation is, on balance, if you look at the likes of JP Morgan and Wells Fargo, because of the increase that we've seen in net income margins, net interest margins, that will mean that there's going to be a real uplift to earnings. But it is going to be the outlook that I think investors are going to be fixated on. Because, of course, since the banking scare erupted, there are so many questions which have now been thrown into the mix, not least the forecast of a mild recession from the Fed, but also this deposit flight, which on one hand appears certainly to be bolstering the bigger banks. But on the other hand, there is also evidence that there's been deposit flight out into, say, money market funds where investors have been chasing higher returns. And so that may also be something to watch as well.
Yeah.
So this is going to be a really interesting bag, I think, of results to go through.
Yeah, and as you rightly say, there's two sides to the deposit story. Can banks, so can the big banks, can the likes of JP Morgan, Wells Fargo, Citi, can they look through some of that deposit flight, or are they going to have to react? Are they going to have to raise their own deposit rates to attract and hold on to those consumers, or can they rely on continued deposit flows from the smaller lenders?
Well, I think what was really interesting was the comments from the Bank of England governor this week at the IMF meeting, suggesting that although there is no systemic risk in terms of the bigger banks in the UK, but the same could be said in the US as well, due to the capital buffers that have been built up because of the changing situation now in digital transfers and the immediacy of just how quickly money can be pulled out if rumors swirl, that potentially banks will need to build up even bigger capital buffers to withstand future volatility. So with that in mind, we may certainly see much more of a defensive strategy coming from management already to offer much more attractive rates to stop that deposit flight, because the feeling is they can't rely solely on those deposits coming from the smaller lenders.
Okay, leaning into a defensive strategy in light of what has unfolded across the banking sector. It was interesting to see that Chinese banks this morning also looking to raise additional capital. Susanna, when it comes to net interest margins then for the big US lenders, how much of a ballast will that be in the quarters ahead?
Well, it still will continue to be a ballast, not to the same extent that we're likely to see in this quarter. But obviously, it certainly does depend on just where rates are going to go from here. Likelihood is that the pause button, when it's pressed, will be pressed for some time. So they should continue to be a ballast. But as I was indicating, if equally banks want to attract further deposits, there will be pressure on those margins going forward. And also the expectation is that, cuts will come. I don't expect them to come, as some in the market watchers believe, anytime soon. I think it's going to be pushed into the long grass. So that could provide a little bit of help. But the other aspect to watch as well is the prospect of more loans turning bad and whether banks have to set aside even more provisions for that.
On that point, what does history tell us about the time frame for those loan loss provisions and that pickup in potential defaults as we weigh up those recessionary risks? Do we have a sense of when the default question is going to be front and center for the banking sector?
Well, certainly there is always a lag, and we're seeing this, for example, in credit conditions report came out in the UK, indicating that there has been this much more reticence to lend because of the expectation of more difficulties in the UK economy, and the same may already have started, and we do have evidence of that. For example, Wells Fargo and JP Morgan have been kind of cutting exposure to commercial property because of concerns within that sector, at least being more stringent on the terms that they're offering, and that process is expected to have happened, started happening last year, even though perhaps those problems haven't so far materialized to the extent that some fear. So certainly there is a lag. It could be a year or so, and that is why preparations have to be made much sooner in advance of that. And of course, as we've seen during the pandemic, many of those bad loans didn't materialize, which then went to bolster banks' earnings in the quarters that followed, as it was able to take back some of those provisions. So certainly I do expect a bit more of a defensive strategy, though, right now to be going on.
Okay, more of a defensive strategy. We'll look for that for the executives from the key US banks. Susanna Streeter, thank you, senior analyst at Hargreaves Lansdown, with a preview, of course, JP Morgan, Wells Fargo and Citigroup kicking off the banking earnings picture later today in the US. We're seeing live pictures now of the Brazilian president outside the Great Hall of the People in Beijing, of course, meeting with his Chinese counterpart, Xi Jinping. The Brazilian president's trip, by the way, to China is seen as key, really, to bolster Xi's credibility on the world stage, as, again, he seeks to try and build momentum for his proposal, his peace plan, has been dismissed in the West, to halt the fighting in Ukraine. Lula, by the way, arrived yesterday ahead of a 4-day visit. There he is on the red carpet, meeting Chinese officials, more importantly, standing alongside his Chinese counterpart, President Xi Jinping. The diplomatic charm offensive from Beijing continues after the visit, controversial as it was, by French President Emmanuel Macron and, of course, European Commission President von der Leyen last week. But there you see Lula alongside his Chinese counterpart, the red carpet and the steps leading up to the Great Hall of the People in Beijing alongside Tiananmen Square. Plenty more coming up. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, Finance, Politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Now, economic data released between now and the Bank of England's May meeting may hold the key to whether the central bank will hike rates again. Jobs data is due on Tuesday and March CPI the day after on Wednesday. Let's get the analysis then and preview from none other than Dan Hansen from Bloomberg Economics. Dan, the UK's problem around the participation rate in the labour market, any sense that we're going to see an improvement in the data coming up next week on that front?
Yeah, so you're right. That goes to the heart of the issue the UK's been facing. We've had this weak supply of labour in the UK. We've also had strong demand, and that's combined, and we've seen wages rise very, very fast. I think looking to next week in the data, we saw some improvement in the participation rate in last month's data. We expect that to continue this month. What I think is going to be interesting, though, is actually the demand side, because the economy is doing a little bit better. Demand's holding up a little bit better. And sort of that combination of still relatively weak supply, strong demand, we think the unemployment rate is going to stay steady at 3.7%. The interesting thing for the bank will be wages. And we think there's going to be this continuation of this quite sharp fall in the wage growth numbers. So you're going to have this balance that the Bank of England is going to be looking at. You've got a tight labour market still, but there's evidence that wage growth is beginning to cool and coming down closer to the level that is consistent with the bank's 2%.
And that's obviously something that they'll welcome, even in an environment of 3.7% unemployment, which of course is historically still pretty low.
Yes.
When it comes then, we can link that obviously to the inflation picture. That data out on Wednesday. Obviously, when you look at the US, PPI, CPI, inflation is starting to moderate, even as core remains a concern, and there's the grind lower, of course, when it comes to the US price pressures. But the picture is becoming clearer that inflation is starting to moderate in the US. Can we make the same call here in the UK?
Yeah, I mean, it's a big call to make on the back of the February data where we saw this big spike up back to 10.4%. Everyone was expecting a slight moderation. We think there will be a moderation this month, partly because we're going to get some favourable base effects on fuel and the like. So we think you're going to get a fall to 9.8%, but you're still up near 10% here in the UK. Core should ease a little bit. I think the difference between the UK and the US, when you're making that comparison, is that we're going to take a little bit longer to see the energy base effects come through. We're going to get a big fall in April in the CPI numbers, and then because we've had this fall in wholesale gas prices this year, energy as a whole, we think could strip as much as 4.5 percentage points off the headline rate by the end of the year. So if nothing else, you get from 10.4 now down to 6% just through energy.
That's huge. 4.5%.
Yeah, it's a huge amount.
You're taking us through to the end of the year. Take us through 2 years then. What is the inflationary picture? Here's no challenge there.
No, not at all.
You can do this. What does inflation look like over the next 2 years here in the UK?
So I think the picture is, and it goes back to this point I made about energy, you're going to have that coming through the headline numbers, and that's going to push down on the headline figure quite significantly. We think by the end of the year, you could be around 3% on the headline rate. That's in contrast, and you made the point about core inflation, sticky core inflation. That's in contrast to core, which we think will be closer to 4.5%. And we don't think core will be close to 2% by until the end of 2024. there's a long grind down for core. The headline rate is going to benefit, though, from these movements in energy prices and the base effects we're going to get into the end of this year and into 2024 as well.
Okay, Dan Hansen, thank you very much indeed with the important preview of that data that comes out next week out of the UK. Of course, Dan Hansen from our Bloomberg economics team, a view there that maybe CPI on Wednesday comes down to 9.8%, and watch for that participation rate when it comes to the labour market here as well. We're going to be covering, of course, all things UK every week on Thursdays, 9:30 a.m. London time in our half-hour special. Let's get the Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Hi, Tom. Ferrovial has won backing for its plan to fold its parent company into its Dutch unit, paving the way to move its headquarters to Amsterdam and eventually pursue a US share listing. Shareholders of the Spanish builder agreed the plan at an AGM in Madrid. The move has infuriated the government of Prime Minister Pedro Sanchez. Now, Boeing is pausing deliveries of some 737 MAX jets after learning of a manufacturing issue. The problem, which doesn't affect the safety of planes, involves some of the fittings that attach the plane's vertical tail to the rear end of its fuselage. It's likely to impact a significant number of undelivered aircraft as well as those stored at Boeing, a setback for the company after a long global grounding for the MAX. India's second biggest software services firm, Infosys, has forecast sales that lagged estimates. The company said it expects to post a revenue growth of between 4 and 7% this year. The software firm's US-listed shares fell over 9% after the outlook prompted Citi to downgrade the stock. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Tom.
Leanne, thank you. Now to France, where the top constitutional body is set to rule on President Emmanuel Macron's very controversial pension reforms. That ruling later today. Unable to command a majority in Parliament, don't forget, the government used a constitutional mechanism to push through the plan to raise the retirement age from 62 to 64 without a vote in Parliament. The move has triggered widespread protests and strikes across France. For more, let's bring in Bloomberg's Caroline Connor, who is in the French capital. Caroline, what exactly then is at stake? How significant is this decision today?
It is pretty significant because today 9 people called the wise men, although it includes 3 women, will have the power to actually cancel this French pension reform from Emmanuel Macron. They will have their verdict probably around 6 p.m. French time today. They will also say whether this should go through a referendum process that will then require 10% of the French electorate to sign in order to organize possibly a referendum next year. It is unlikely, though, that the Council will reject the reform entirely. Most probably, they will reject parts of the reform, especially the senior index, which forces companies to publish the number of older workers over 55 years old they employ. That could actually go out of the reform. Of course, if the entire reform is rejected, that would be a disaster for President Emmanuel Macron. He would have to start from scratch on this entire pension reform.
Caroline, where do things stand on the protests? Do they continue? Do they continue in Paris? Do they continue across the rest of the country?
You had a few tensions that you just saw in front of the Constitutional Council yesterday on the sidelines of the 12th day of a general strike in France. And you also had a symbolic action by some railway workers storming into the LVMH headquarters on the very fancy Avenue Montaigne, 1 week actually after those same railway workers stormed BlackRock last week. So obviously a lot of symbolic actions expected today, but overall the turnout at these protests has gone down. So basically the number of people protesting has gone from around 1.3 million people at the peak at the beginning of March to less than 400,000 people yesterday. There is another planned action on May 1st, but that is traditionally a lot of protests because it's Labor Day. We'll see, however, if this Constitutional Council decision actually fuels more protest or actually creates a fading down of the action against the pension reform.
So what are the stakes then? What are the stakes for Macron if this Constitutional Council, the wise men, including thankfully some women as well, if they reject these reforms?
So obviously for Emmanuel Macron would be a big blow because this has been part of his election campaign. This has been part of his entire reform agenda for this second mandate. And, you know, he cannot run again in 2027. So, of course, that would be a big blow. That would kind of give some room for the unions to say, you know, we were right. We shouldn't raise the retirement age from 62 to 64. But immediately, obviously, his own position as the head of state of France will remain. However, his prime minister, Elisabeth Borne, would be in great danger. She's already obviously facing a lot of criticism on the way she handled this reform, on the way she fought through the reform in parliament without a vote. So Elisabeth Borne's future is very uncertain, that's for sure. And as you can see, a majority of the French still oppose this reform.
Okay, Caroline Conner in Paris for us, looking ahead to the significance of that Constitutional Council decision expected, as she said, at around 6 p.m. French time later today. We've got live pictures, I believe, still of the visit by the Brazilian President Lula to Beijing. There you can see him on the red carpet, leading up to the steps of the Great Hall of the People alongside Xi Jinping. Of course, two major components in the BRICS compact. Brazil, of course, alongside China, and Brazil essential for China in terms of the provision of commodities, soft commodities from things like soybeans, but also, of course, things like iron ore as well. And the investment then from China into the infrastructure of Brazil in terms of that relationship. Interesting to hear from Lula earlier on, this is part of a 4-day trip, saying that maybe the BRICS nations need to come up with their own currency to avoid being at the whims and mercies of the US dollar. So you can see the two presidents walking up the red steps and the red carpet, the steps of the Great Hall of the People in central Beijing that sits alongside Tiananmen Square. And you can see the military parade and band there as the two leaders head up those steps. Again, the first day of a 4-day visit for the Brazilian president as Xi Jinping continues that diplomatic charm offensive. Plenty more coming up here on Bloomberg. Currently, your European markets up 0.3%. The future's lower in the US, down 0.2%. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, a key story for us today and a focus is US banks. Earnings, of course, kicking off later today with JP Morgan, Citi and Wells Fargo all reporting. Investors laser focused on deposit flows as, of course, investors continue to digest the global banking turmoil that has rippled through that sector. Let's bring in Bloomberg's finance executive editor, Michael Moore then. What is the biggest thing that you are looking for out of these earnings then?
I think it's that deposit number and you have these two conflicting ideas. One was this rush to safety from the small banks to the big banks during the March turmoil, and the other is the search for yield. You know, the fact that people can get, 0.5% in their savings account, but can get 4.5% in treasuries, and what wins out there. Analysts expect deposits to be down at the big banks, but how sharp is that decline? There's also the other questions of asset quality, the investment portfolios, how those held up during these March, swings. So there's a lot of questions for the banks right now.
Any sense that investment banking is starting to turn around?
No, not so far. I think the first half is going to be quite quiet. Even last year when you saw the slump, there were still some deals completing that had started. That seems to have tailed off. So I think, we're expecting investment bank fees to be down a quarter from what was already a low level. And even trading seems to be quieter than last year. So on the Wall Street side, things are definitely down.
Okay, Michael Moore, thank you very much indeed. Really important day, of course, for the bank earnings and what it tells us about the broader banking sector. Finance executive editor, of course, for Bloomberg, Michael Moore, with a preview of JP Morgan, Wells Fargo and Citigroup and the essential things to focus on, the deposits and to what extent they've drained out of those larger lenders. We have some lines crossing around what is happening with Boeing. Shares there falling after they have paused some 737 MAX deliveries. You can see then Boeing down 4.5%. That, of course, is pre-market. The US-listed aircraft maker down 4.5% on concerns around 737 deliveries and a pause. Across your broader markets, you're looking at US futures down 0.1% on the S&P. Stay with us. This is Bloomberg.
Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company.
how are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
Financial conditions have tightened to some extent, but it's really in the banking sector that we have seen most of the tightening, and that could have consequences down the line for macro activity.
The losses that occurred were a substantial expansion of deposits, borrowing at very low rates at very short periods of time. It's interest rate losses, it's not credit losses that are rolling through.
I think we're not over yet. How bad it gets, we will have to see. I think this problem is more systemic.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Bank earnings loom. Deposit levels will be in sharp focus as JP Morgan, Wells Fargo, and Citigroup kick off U.S. earnings season. Hermes surges as shoppers snap up pricey Birkin bags. Meanwhile, LVMH's robust results help Bernard Arnault solidify his status as the world's richest person, leaving Elon Musk in the dust. And the Biden administration is going to have a hard time explaining how the biggest U.S. intelligence leak in a decade may have been committed by a 21-year-old Air National Guardsman. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. And Kriti, it is very good to see you this Friday. Soft data out of the U.S., giving a boost to sentiment, it seems.
Yeah, reunited on the air, Anna. Pleasure to be with you as always. And I think that's 100% right. When you are looking at sentiment here, the banks are really going to change that. Remember, we're going to start hearing from them in just a couple of hours. We are seeing futures down just a little bit on the back foot by about 0.2%, but nothing to write home about yet because we're still waiting for exactly what the banks actually say. It's not just about the turmoil and the banking crisis specifically, but also what, of course, Jamie Dimon has to say. We know he's been both an advocate of the economy, but also warning about an economic hurricane. What does he say this morning that could move the entire market? So really a word of caution ahead of what could be a very volatile trading day. The bond market, though, Anna, is what's interesting to me. 3.96 on the 2-year yield, staying sustainably below 4%. It every time keeps touching that 4% level technically and retreats. I wonder, in a world where we're starting to see higher commodity prices, shelter costs also not coming down as quickly as we'd like, how long does that 2-year yield stay below 4%? Or is that it? Is 4% the ceiling for the yield right now, kind of unchanged? Again, waiting for what the bank results tell us. The dollar, a similar story. Gold, though, another major story I want to talk about because, look, Anna, there's only been 2 times in history where we've gone over 2,000, and we are there right now. The record there for gold prices, 2,060 on spot gold. We're at 2035 right now, lower by about 0.3%, but this is a commodity you want to watch, Anna.
yeah, really has been moving in sync, albeit in this sort of opposite direction to the dollar, hasn't it, Chrissy? And that's certainly something we focus in on. So we'll certainly watch the gold price, see if we get any new highs, new all-time highs on that gold price. This is where we are on European stocks then, Chrissy. A broadly positive picture, not as positive as it was yesterday out of Paris, but still we have that driver coming through. So consumer products, the luxury goods side of things, did very well yesterday on the back of those LVMH numbers. Today it's the turn of Hermes. We'll get to that in a moment. So broad-based gains, not in the Dutch market, but elsewhere we see coming through across European equity markets. I mentioned Hermes, and that's one of the companies that is in focus today. This is the luxury handbag maker, luxury silk scarves, of course, as well. The stock up by 1.1%. Again, a story of beating sales estimates as a result of strength coming through from China. But because the sector as a whole rallied so strongly on the LVMH numbers yesterday, price for perfection, in the words of one analyst, it did mean that it was pretty difficult to send the stock higher again this morning, but we have managed to do that just a little bit. And then a couple of Eurozone assets for you. Well, the French two-year yield and the euro dollar. And really, I put these in here because I wanted to focus on what we've been hearing from the ECB. The conversation around the Fed carries on, whether we get one more hike or not from the Fed. How close to being done are we in terms of the hiking cycle? The ECB story, though, is much behind the Fed, it seems, and a lot of people still talking about whether we get 25 or 50 from the ECB this time around. We've had some hawkish commentary coming through from the likes of Kazaks and Holtzman, and also Klaus Knot giving his lending his name to that list of hawkish comments of late, and the euro pushing up to that 110 level, so worth keeping an eye on that one. Here's Brent crude at 86.10 for the past 30 days then, Chrissy. We've seen quite a lot of strength in the oil markets. We heard from the IEA today. They were saying that the consumer is going to be under increasing pressure as a result of the OPEC plus cut in production that we saw just a week or so ago.
Yeah, certainly something we're keeping an eye on, especially in the context of whether or not inflation actually continues to decelerate, seeing peaks in several parts of the world, Spain, France, Brazil, you name it. Well, we want to go from the macro and come back to the micro, especially stateside. Bank earnings kicking off today, very much in focus. JP Morgan, Citi, Wells Fargo, all due to report. Investors laser focused on deposit flows as markets continue to digest the global banking turmoil and the ripple effects that come after that. Sonali Basagar, global finance correspondent, joins us now for more on what to expect. Sonali, look, it's all about deposit flows. It feels like that seems to be the message from a lot of investors. To what extent is that true?
There are a lot of focuses on deposit flows, especially at the regional banks, but you have to also think about this big conversation Wall Street is surrounding around credit crunch and whether there is one or not. We start with JP Morgan here in PNC, and it's a good indicator of what different types of banks are doing to lend to this economy at the same time when you have analysts expecting charge-offs to start ticking higher. Now, of course, all of this has a potential really to weigh on profitability. I'm also looking for the loan-to-deposit ratio. How much are they lending relative to what they're taking in deposits? But remember, there are other businesses here, Critty, when you look at the big bulge bracket banks here, about what they can expect in terms of trading and investment banking also. So all in all, we're looking at all the numbers in their entirety, but there are a lot of questions about the deposit movements over to the big banks.
Yeah, and in terms of where those deposits go and where people are investing and not, we keep an eye on that, of course, at this point. A Schwab investor, this is according to an FT report, a Schwab investor, GQG, is exiting its $1.4 billion stake. I emphasize that's an FT report, but this is another business that we're watching very closely in this regard.
Yeah, one of the GQG investors had told the Financial Times that it's not an existential threat that they see to Schwab, but a threat to profitability. And we know that there have been movements, really drastic movements here across the industry, from deposits into money market funds as investors search for yield. Now, that has the potential to really impact Schwab's profitability. They report earnings on Monday, and we know that they've seen a significant sell-off in their stock so far this year. With that said, we also have seen other investors, even with that 38% decline, see this as a buying opportunity, Anna. And I think a lot of this is going to be a rate story in terms of when Schwab will really be able to turn around some of its numbers and really also start to feel less pain in its mark-to-market portfolio, in the bonds that are held to maturity. So again, the Ron Barons of the world are seeing this as a buying opportunity, but Monday will tell whether there is more pain to come for a company like Schwab that has certainly seen a significant sell-off this year.
Okay, we'll watch the big banks today. We'll watch as the earnings story unfolds, and we'll certainly watch what we get from Schwab. Thanks very much to Sonali. Bloomberg's Sonali Basak with the latest there. And on the banking sector, I should just mention that MUFG out of Japan is giving some quantity around losses associated with the Credit Suisse AT1 wipeout. Remember, that is the class of bonds that didn't do so well as a result of that. And what we've heard from them this morning is around the level of losses that came through. Their MUFG clients lost $700 million in Credit Suisse AT1 wipeout. So some some quantity around, some size and scope around the losses there. Now turning to the luxury retail sector, it's been a theme all week. Hermes quarterly sales jumped as the maker of the Birkin bags continued to see strong demand from Chinese customers. Joining us now for more, Andrea Felsted from our Bloomberg Opinion team. She's a columnist covering consumer goods and the retail industry. Andrea, walk us through some of the numbers here, because this feels like it's the same as yesterday, isn't it? Another day of strength in China being demonstrated for the luxury names.
That's right. Again, Hermes beat, not perhaps quite as much as LVMH, but it still beat on that China demand coming through. And that's a relief for investors because the stocks have run up so much this year. Hermes up about 35%, LVMH 30% year to date. So that China momentum really needed to come through.
Andrea, LVMH as well becoming the 10th biggest company in the world. That stellar sales beat that we talked about yesterday. What does that mean for the world's richest man? Probably not so great news for Elon Musk.
That's right. Bernard Arnault continues to power ahead on the demand for those monogrammed bags, and it's interesting because he's very much stuck to his luxury knitting. He knows that he is a seller of luxury goods. That's what he's done. He's also broadened LVMH to be not just a luxury company. He talks about it being a cultural company as well. And when you think about Pharrell Williams being appointed as the top designer at Louis Vuitton menswear, you've got the store, the New York flagship for Tiffany reopening soon. That will be another opportunity to bring LVMH to a younger, broader audience in the US. So he's selling culture as much as he's selling handbags.
Okay, and he's certainly selling a lot of those, isn't he? Andrea, thank you very much. Andrea Felsted joining us there from Bloomberg Opinion with the latest on the luxury sector. On to US politics, and the FBI has arrested a 21-year-old Air National Guardsman for the leak of highly classified documents. Attorney General Merrick Garland says that Jack Teixeira will be charged with the unauthorized removal, retention and transmission of national defense information. Mark Champion, Bloomberg senior reporter for international affairs, joins us now with more. Mark, what do we know so far about the alleged leaker and what's been leaked here?
Yes, so, I mean, first of all, a lot of focus on his age, the fact that he's a National Guardsman in Massachusetts. It does seem a really remote corner of the Pentagon's empire where this leak occurred. On the other hand, that may be a little bit misplaced. He is at the center of a part of a network that collects and distributes intelligence for the Air Force. And so it shouldn't be too surprising, either his age or the fact that he had security clearance. I think the real question is going to focus around, what he had access to, because these kinds of documents, these are more policy documents, really kind of broad scope. They were designed for the Joint Chiefs of Staff. So, there will for sure be questions about, why he had access to this particular kind of information.
And of course, a lot of questions to your point about just how intelligence broadly is handled. Mark, talk us through some of just the next steps when it comes to how they're going to deal with this.
Yeah, I mean, it's not the first time that they've had this kind of problem. You remember the Snowden leaks and so on. It's embarrassing to the United States. It has, really underscored again that there's a lot, too many people, clearly, with access to too much information within the intelligence network. That was something that was really done in part deliberately after the 9/11 attacks, when it was thought that one of the problems there was that the intelligence was too siloed and the agencies weren't talking to each other. Not enough people had access to information. So it may be that the Pentagon and the agencies, the security agencies in the U.S. are now going to want to sort of swing the pendulum back towards a bit more tight control over who gets to see what.
Bloomberg's Mark Champion walking us through the international stories we need to know. We thank you as always. Now, a look at some of the stocks we're watching in the pre-market when it comes to right here to the U.S. Boeing is going to be a major mover, especially if you are a watcher of the Dow. Now pausing deliveries of some of its 737 MAX models to address a manufacturing issue that doesn't affect the safety of planes in the air. This really has to do with supply chain issues. Take a look at the shares, though, already in the pre-market as we're waiting for those bank earnings to give the broader market some direction. You are seeing the shares drop almost 5% in the pre-market. That is going to have a ripple effect to companies like Spirit AeroSystems, for example, down even further. They're the ones who supplied the faulty part to Boeing in the first place, and those shares really taking a hit, down about 12%. Remember, it brings up questions about does Boeing then change its supply chain, and also what does that mean for future government contracts for Spirit AeroSystems? Remember, a good chunk of Boeing's revenue does come from those government contracts. Lockheed Martin, a similar story. Spirit AeroSystems in the supply chain for both. I want to get a little bit away from the aerospace and defense sector and talk about Tupperware. Don't we always need that, Anna? TUP is the ticker here. Shares actually rallying higher by 10%. A fourth day of gains. They're working on a turnaround plan, and this time employing advisor Alvarez and Marshall to really help them with that. Remember, Tupperware was dealing with a potential bankruptcy, and a big underscore on that. They've really come out and said, look, we are trying to tackle this in a variety of ways, really trying to cut those costs where we can, and it looks like it's something that the market is really rewarding.
Okay, from aircraft manufacturer to kitchen essentials, this show is nothing but eclectic. Chrissy, thank you. Coming up on the program, Zoe Gillespie joins us, investment manager at RBC Brewin Dolphin. What does she make of the latest data out stateside? Was that due to assumptions around the Fed and where it moves next? What opportunities does she see for 2023? And on bank earnings, we will get into a conversation with Greenwood Capital CIO Walter Todd. He'll bring us his thoughts on the big banks, the smaller banks, the flow of deposits between the two and elsewhere, plus the constitutional decision on President Macron's plan to raise the French retirement age. More on that ahead. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This week, surveillance is live from Washington, D.C. as part of Bloomberg's extended daily coverage of the World Bank Group and International Monetary Fund's spring meetings.
These meetings, even with the banking crisis in place, are really, really important.
Economic outlook, poverty eradication, aid effectiveness, and more.
How slow could global growth get?
You could have a global recession.
Live coverage throughout the day continues all week on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off. Banks reduced their borrowings from 2 Federal Reserve backstop lending facilities for a 4th straight week following the collapse of Silicon Valley Bank last month. Here with more is Bloomberg's Valerie Teitel. Valerie, walk us through it.
Yeah, we got this data out after the close last night, Kriti, and it showed a positive picture. The Fed's emergency lending has now dropped for a 4th straight week. And the most important thing is that the Bank Term Funding Program, the BTFP program, that finally saw a drop in lending. That was that Fed's special lending facility they set up that late Sunday night in the aftermath of SBV. This is painting a very good picture that the demand for cash from these small regional lenders is alleviating somewhat. We also got some more information about the money market flows. Now, money market flows, they have really picked up steam since the banking crisis started back in March. Now, this poses problems for banks because they need to compete with deposits for these money market funds, which yield a lot more than a lot of traditional bank deposits do. But in the data release yesterday, it showed that that flow into the fund, even though it's still growing, it is slowing. It is slowing at a weekly pace. That is the first time in a while that we've seen this pace really slow since that drastic jump back in March. It paints a better picture looking forward for the banking sector in general.
Yeah, that'll certainly be front and center when it comes to the bank earnings story, won't it, Valerie? That and the tightening of financial conditions where we're seeing it. Now, a week to go until the Fed's blackout period. Will we see a chorus growing around a pause in May? Because increasingly we seem to be talking to guests who, guests and market participants who aren't quite sure what happens next with the Fed.
Yeah, that's right, Anna. And we've heard some quite dovish things from some lesser influential Fed speakers earlier this week. But we do hear from Waller today. He speaks at 8:45 at an event in Florida. There is a Q&A. Now, note, he is a very influential member at the Fed. The big question is, will he echo the comments that Mary Daly gave us a few days ago, echoing the fact that the Fed may not have to hike at the next meeting? Or will he echo more of the New York Fed President John Williams when he said, we haven't seen any clear signs of credit tightening and one more hike in May sounds reasonable? I'm going to be listening very closely if he talks about the weight that the Fed is now giving to the hard data versus these softer lending surveys when it comes to showing just how much credit has tightened within the banking turmoil fallout. He speaks at 8:45 a.m. You can follow along live on LiveGo on your terminal.
Okay, Valerie, thanks very much. Bloomberg's Valerie Teitel with all the market-moving stories you need to know in terms of the banking sector and the Fed narrative. For more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in the store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's keep you up to date with news from around the world. Here's the first word. The U.S. is pressing the need for allies to coordinate against economic coercion, not just military threats. This is as Japan prepares to host top diplomats from the group of 7 nations amid heightened tensions with China. U.S. Ambassador to Tokyo, Rahm Emanuel, saying, quote, that coercion piece is important. China is set to be a key focus of discussions at the meeting. China's mega banks are planning at least 40 billion yuan of bond sales, kicking off a major funding push to comply with global capital rules by early 2025. Bloomberg has learned Industrial and Commercial Bank of China and its 3 closest rivals are planning to tap domestic debt markets to sell a new category of total loss-absorbing capacity bonds as soon as June. Supreme Court Justice Clarence Thomas and relatives sold 3 Georgia properties that include Thomas's boyhood home to GOP mega donor Harlan Crow in 2014. That's according to a report. ProPublica says that Thomas didn't list the real estate sales on his financial disclosure form that year or report his extensive travel financed by Crow that occurred over 2 decades. Dozens of advocacy organizations and children's safety experts are calling on Meta to terminate its plan to allow minors into its new virtual reality world. Meta planning to invite teenagers and young adults to join its metaverse app, Horizon Worlds, in the coming months. But some argue that young people could face harassment and privacy violations on the virtual reality app, which is only in its early stages. Anna, it's a little bit of a scary topic there, especially when we talk about a company like Meta that for a while has been losing that younger demographic, has come under a lot of pressure with Instagram already, especially at a time when Twitter, Snapchat, TikTok, all under even government scrutiny.
Yeah, I have to say, for parents, it's turning into an almost full-time job to try and keep across all the parental controls that are required to allow children to participate on the bits of the internet that exist already, let alone the metaverse. But yes, you're right, and it's certainly a sector that has and will continue to face a lot of scrutiny, Kriti. We all remember the 2021 whistleblower that was critical, in particular around Instagram, of the Meta story and the way that it protected, in particular, girls using that platform.
Yeah, it's really important. And then remember, Meta also has things like WhatsApp under its umbrella and potentially more acquisitions in the future. So a lot of scrutiny there.
Yeah, coming up on the program, we'll get back to the markets. Zoe Gillespie joins us, investment manager at RBC Brewin Dolphin. We'll get back to the markets conversation. This is Bloomberg.
institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Bank earnings loom. Deposit levels will be in sharp focus as JP Morgan, Wells Fargo and Citigroup kick off U.S. earnings season. Hermes surges as shoppers snap up pricey Birkin bags. Meanwhile, LVMH's robust results help Bernard Arnault solidify his status as the world's richest person, leaving Elon Musk in the dust. And the Biden administration is going to have a hard time explaining how the biggest U.S. intelligence leak in a decade may have been committed by a 21-year-old Air National Guardsman. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. And the softer data then, Kriti, lifting sentiment for risk assets yesterday, but those same risk assets, certainly U.S. futures, fading a little this morning.
Yeah, just a little bit. I mean, it's all going to be about bank earnings, as you mentioned, Anna. And of course, that's going to have a little bit of a wait-and-see approach when you look at what futures trading is really going to kind of how it's going to evolve in the next few hours. Remember, we still have about 4 hours before the actual opening bells here in New York. And what that means for futures right now is simply that they're down about 0.2%. But again, amid light volume. So you aren't really seeing a ton of participation in this market yet. Anna, give it an hour or so, it'll completely turn around. A similar story in the bond market. The 2-year yield at 3.96. Remember, 4% is that key technical level for the 2-year yield. How long can it stay below? It's already tested about 4% again by about 3 times. So maybe 4th time is a charm. We'll find out. And of course, amid that low volume, remember, the dollar is really taking its cue from 2 things. 1, what's going on in Europe, with the euro really driving the dollar in a lot of ways. And 2, what's going on with that 2-year yield. Lack of direction in the 2-year yield really keeps the dollar at the whim of the euro right now, and I should say other European currencies as well. Gold is the one that catches my eye. We love to do a commodity check here, Anna, but for me, 2035 on gold, we are very, very close to the 2060 all-time record high of gold. At the same time that the bond market is catching a bid, gold is as well. We're, of course, going to see how long that lasts and whether we, of course, test that all-time high again or even make a new record high. That's the macro, and I want to hit the micro really quickly. Boeing is going to be a very big player in today's trading. You're already seeing the shares drop just shy about 5% after pausing deliveries of some of their 737 MAX models to address a manufacturing issue that doesn't affect the safety of planes in the air. Now, the ripple effect there goes to names like Spirit Aerosystems, down about 12%, already seeing the pain there. They're the ones who supply that faulty part to Boeing. The concern here is, look, if you're not going to get that government contract, it just takes one slip up to start missing those. What does that do to your bottom line? That's really what's getting priced in here. To the upside, though, we do have some gains here. Tupperware up there about 13%. TUP is the ticker there. The 4th day of gains after a report that they're working on a turnaround plan with turnaround advisor Alvarez and Marshall. So a lot of moving parts on the micro front, Anna.
Absolutely. A lot of moving parts here in Europe as we wait for the bank earnings season to get underway then, Chrissy. And European equity markets are moving higher as we start to get some earnings coming through here. Certainly some sales updates today. Ongoing focus on the luxury sector for Europe. So the stock 600 up by 0.4%. Hermes from the luxury space selling more and more handbags, it seems. China, once again, reopening is the core driver of that story, as well as US consumers. But the stock up by 0.9%. It touched an all-time high yesterday, along with LVMH on the back of the strong earnings from that larger rival. So price for perfection was the way that some analysts described the Hermes share price going into today's sales update, and they managed to surprise to the upside and go a little bit higher on the share price. A couple of assets moving around interest rate differentials, and this is interesting because we continue to get fairly hawkish messages coming through from ECB officials, and we're hearing something a little different coming through from at least some over at the Fed, and so that puts interest rate differentials, the path of hiking still ahead of us from the ECB, very much in focus, and that's what seems to be driving up these yields in Europe, in contrast to what we're seeing on treasuries. Not big moves, but certainly it's been a driver for a while and continues to be so, and also one of the drivers behind the euro, behind the dollar, behind the gold price that you showed earlier, Critty. So the euro at 110.57, up 0.1% against the US dollar.
Yeah, certainly something we're going to keep an eye on. It's interesting. We're almost reversing a lot of the market moves that we saw in last year. Let's see how long that lasts. Joining us now is Zoe Gillespie, investment manager at RBC Brewin Dolphin. Let's start there, Zoe. I want to really talk about the currency picture and how it kind of floods into perhaps the stock market, the bond market, the commodity market. Are you at all concerned about how quickly the dollar may decelerate?
Well, obviously, if you do think that you're going to get the peak of rates, then certainly the dollar may start to weaken if we do see that we are nearing the end of the cycle. And we think that potentially we may be getting there. I mean, the market's kind of potentially pricing in a 25 basis point kind of hike in May. So, and if it does start to kind of peak at that, then we may see some dollar weakness. And certainly other currencies have started to pick up against the dollar, obviously, over the last few months, and we see that trend potentially continuing if rates do peak.
Yeah, a defensive bid certainly into the markets. You're seeing it in the bond market, the gold market, as you just pointed out, and of course in the tech space as well, with tech making most of the S&P 500's rally in the last couple of weeks. Zoe, when we look at the gold prices specifically, is that a move that's justified?
Well, I think it's obviously a defensive play, and I think it probably cuts into the sort of narrative that the recession may start to hit sort of in the second half of this year. So I think a defensive play as well. So gold has actually rallied on that. So I think it maybe shows there is some nervousness still in markets just now.
Yes, indeed, some nervousness, but a lot of strength in some sectors. And Zoe, I just want to focus in on the luxury sector with that in mind. Results from LVMH yesterday, results from Hermes today, both of those driven by strength in China, of course. But it's interesting that I was talking to someone from Goldman Sachs earlier who was saying that consumers in lots of parts of the world are actually doing better than maybe the interest rate story might have led us to expect right now, because unemployment rates have stayed so low. And so as a result of that, the consumer is stronger, and so consumer spending holds up. Is that something that you see rippling through your strategy?
Yeah, I mean, I think the luxury goods story has been one that's played out this year, and I think the reopening of China. And interestingly, demand was strong also in Japan and in Europe. It was only potentially a bit weaker for LVMH in the US. So the story is still there for the high-end goods. But I think if you look at kind of certainly results yesterday from Tesco, which is at kind of level for general consumers, there's margin pressure there. So it seems to be the demand for luxury is probably the sort of playing out from the kind of China reopening story.
Sticking with the UK, as you've taken us to that part of the conversation, Zoe, I know that we got inflation data in the UK that surprised even the Bank of England pretty materially. We got confirmation of that from the chief economist, Hugh Pill. He was also saying that he thinks that the tight labour market could lead to a positive demand shock. What would the impact of that be, do you think, for the UK?
Yeah, I mean, I think we've seen sort of inflation still being quite high in certainly the UK, and I think we see it has taken longer to cool. So I think we are potentially going to have more interest rate hikes, which you will going to see sort of, I think, weaker demand. And as an economy, we are forecast to sort of dip into negative growth soon. So I think demand could certainly cool in the second half of this year. But the labour market, to be fair, has remained fairly resilient, which is why it's kind of difficult to call.
Well, Zoe, we're starting to see a little bit of a pickup in inflation, although perhaps not one that's as concerning as what we saw in 2021 and 2022. But there are markets around the world where inflation is almost turning around, where it's not decelerating, it's not going in a one-way direction. Spain, France, Brazil even is dealing with them, Indonesia even. Are you at all worried about that hitting the more developed markets, the US, the UK, and I mean, I'm going to say France. France is a developed market, but you know what I'm saying. Are you worried at all about that possibility?
Yeah, well, the IMF this week have come out and said that they expect inflation to be higher globally. So I think their forecasts have changed a little from January. So the prediction is that inflation is going to be here a bit longer. And I think that plays into the kind of how central banks deal with it and whether we are going to see the rate hikes continue and whether rates are going to be higher for longer. At the moment, it feels that inflation is certainly cooling in the US, but it's certainly still there and it's still very sticky. So we are starting to kind of feel that I think this may play into the kind of what the central banks are going to do and whether we are going to see, as I say, rates higher for longer, which at the moment the market's kind of, the strength this week we've seen in US equities, in particular NASDAQ, the narratives may be slightly kind of contradicting that just now. So it's going to be interesting to see how it kind of plays out in terms of sort of inflation versus what the Fed's going to do.
And what are you expecting to see in the earnings season then, Zoe? What will you be watching for? We get the bank earnings season, of course, kicking off today.
Yeah. I think the banks is going to be obviously key to see what level of deposits and certainly outflows are going to look like, as well as margins. And I think it'll be interesting to see what their kind of outlook statements are, because obviously the data is going to be kind of backward looking, but we may get some sort of indications from the statements as to the sort of outlook for banks. And then obviously next week we've got the tech sector, which has had a really good rally this year. So it's going to be interesting to see how the results play out, whether it's actually on sentiment or just fundamentally there is an improved kind of narrative in the tech sector, and we're going to see sort of that coming through to looking at margins and looking how they've been able to absorb potential cost increases as well, which was a big factor last year.
Zoe, thanks very much for your time. Zoe Gillespie of RBC Brewin Dolphin, thanks for joining us. Coming up on the programme, we'll stick with that theme of earnings and focus in on the bank sector. We'll talk to someone who owns a number of banks. Greenwood Capital CIO Walter Todd is underweight versus towards the banking sector compared to others, but still has some holdings there and some interesting insights to share. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Preeti Gupta in New York with Anna Edwards in London. Matt Miller is off today. The largest U.S. banks set to kick off earnings season with J.P. Morgan, Citi, Wells Fargo, all due later today. Bank stocks looking historically inexpensive. Reports from key lenders over the next 2 weeks are going to help investors gauge if the sector's too cheap to ignore or too risky to touch. Joining us now is Walter Todd, CIO at Greenwood Capital. His company holds positions in Bank of America and J.P. Morgan. Walter, a pleasure to have you on the show. Thank you for waking up bright and early. Let's start there. Are these companies too risky to touch?
Well, good morning. Glad to be here. I don't think they're too risky to touch, but I don't think you want to be necessarily overweight the financial sector as a whole. I think there's, the stocks have obviously, particularly the regionals, have been hit very hard. Some of the bigger banks, not as much. So I do think there's some value there, but I just think it's going to be a tough road as we look forward for the remainder of this year and into 2024 as economic growth slows.
Walter, talk to us a little bit about deposit flows here, because it feels like the no-brainer of the regional banks, some of these regional bank collapses, that deposit flows in the larger banks are going to skyrocket, are going to jump. Are we at all worried about some sort of reversal of that?
Yeah, so we've seen net deposit flow out of the banking sector as a whole, and that's actually not a new phenomenon. It's actually been happening since kind of the middle of last year as rates moved up, as the Fed raised rates. But it definitely accelerated as rates hit about 5% earlier this year. And like you said, regionals have taken it on the chin, and they're going to have to raise deposit rates. And so that's one of the challenges for banks as a whole, is that spread, that net interest margin that they've benefited from for so long is actually going to start to shrink. And we heard that from last quarter. So I think the bigger banks are going to continue to see net deposit flows into those institutions, and I don't see that reversing anytime soon. But the profitability of the banking sector is going to be pinched as they have to raise deposit rates to try to stem the overall outflow of deposits.
Yeah, I wonder which part, good morning to you, Walter. I wonder which part of that story we should focus on. Should we focus on the flows from small to large, or the flows from the sector as a whole to money market funds? I guess it depends where in the banking sector you're exposed to.
Exactly. Yeah. What banks do you own, and how are they seeing their deposit flows? I mean, that's definitely going to be a question that every bank gets asked on their quarterly call. They're going to be asked about, you hear this term deposit betas, which is how quickly they have to raise deposit rates relative to overall rates, and then what they're seeing from a deposit flow standpoint. We saw, for example, with Western Alliance, when they gave an update but didn't provide an update on their deposit flows, that the stock got hit very hard. So I think it's going to pay for management teams to be open about what's happening in real time so that investors can get a better sense of what's going on, because to this point, we just haven't seen any real details, and we'll get those in the coming week.
So we look for that. We also look for any guidance around credit conditions, the extent to which the banking sector is still willing to extend credit, and to whom, Walter. I wonder what you're going to be looking for there. We heard from Janet Yellen. She was not too concerned about what she sees developing there. I think Lael Brainard had a slightly different take, more concerned about what she'd been seeing in terms of credit being extended to the real economy. What will you be watching for in the conversations with bank executives there?
Yeah, so I want to hear about what they're seeing from a loan growth perspective, from a demand perspective, for one, and then two, obviously, their willingness to lend. We know in the senior loan officer survey that we haven't gotten an update on since the banking stress was already elevated. In other words, credit conditions were already tightening before the bank failures that we had. So you would expect that's going to get even tighter. So I want to hear from the management teams on kind of what they're seeing and what they're doing on a real-time basis. But I think it depends on your outlook for the economy. If you look for the economy to slow in the second half, you got to imagine that credit is going to become a problem, a bigger problem, as we move through 2023 and into 2024.
Well, Walter, it's interesting that you talk about profitability for some of these banks. I want to talk about the trading revenue specifically, because as we're talking about this banking turmoil on the regional basis, globally even, what was going on with UBS and Credit Suisse, bond volatility has gone off the charts. Is that going to feed into trading profits?
Well, we'll see. Interestingly, you had Truist, which is kind of a super regional bank, eliminate their trading in mortgage-backed securities and agency bonds yesterday. They let go about 80 people. But I think some of the bigger institutions like Goldman Sachs and Morgan Stanley will probably benefit from the volatility that we've seen in the fixed income market. I mean, Goldman's traditionally been the best at that. So that could be a little bit of a tailwind for those for those companies. But overall, the lending business and the deposit business is where the squeeze is going to be.
And talk us through where you see opportunities in the banking sector. So we talked about it for sort of holistically and mentioned a little bit about where you see exposure. But where do you see, in the midst of all of this turmoil, Walter, I hear that you don't want to be overweight the sector, but are there areas that you think are maybe have been oversold and look interesting to you?
Yeah, so I think, in our large cap strategy, right now we own JP Morgan and Bank of America. So those are I think the safer institutions, particularly JP Morgan and his balance sheet. But Bank of America is very inexpensive, could be challenged a little bit here in the short term, but we like that longer term. We've held it for a long time. When you look at some of the regionals, we're in the Southeast. I think a lot of the regionals in the Southeast have a lot of tailwinds economically that other parts of the country may not. So we like some of the regional banks that are located here in the Southeast, and we own in our dividend strategy, for example, Truist and Regions Financial as well.
No doubt some of the conversations with banking executives, Walter, will focus on what went wrong during March and what can be done to put that right. Where will the focus be for you? I mean, regulation is going to be something that will be talked about. Also, the actions taken by those who run the financial system, I suppose, Walter.
Yeah, I know that the president of the New York Fed tried to say that their increases didn't have anything to do with the banking stress. I think that's sort of ridiculous. It certainly had contributed to it, but definitely I think the question for management teams of banks is going to be, how is your asset liability match? Because that was the real issue with Silicon Valley Bank, was they went out too far on their security investments and the mismatch with their loans and deposits. So I think that's going to be the focus on these earnings calls for management teams.
Walter, thanks so much. Thanks for joining us. Walter Todd of Greenwood Capital with his thoughts on the banking sector. Coming up, France's Constitutional Council decides on President Macron's plan to raise the French retirement age. That will happen today. We'll be live in Paris next with a preview. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. Now, later on today here in Europe, France's Constitutional Council will rule on Macron's pension reform. The controversial plan to raise the pension age to 64 has faced mass protests over the last, months, in fact, across France. Joining us now is Bloomberg's Caroline Conan in Paris. Caroline, good morning. What exactly is at stake then today as we hear from this court and we get the court's verdict on what President Macron is trying to do?
A lot is at stake, Anna, because the Council is going to rule on the entire pension reform. So that reform could actually just go away. And that would be, of course, a big blow for President Emmanuel Macron, because that's been part of his political campaign since he was re-elected last year. Another thing that the Council is going to rule on today is whether we should have a referendum on this entire pension reform. That will then start a process where the opposition will have to get about 10% of the French electorate to sign, so that's nearly 5 million people, in order to organize a referendum on it possibly next year. It is very unlikely that the Council will reject the reform entirely, but it is possible that they will reject part of the reform. And of course, if they approve it, for Emmanuel Macron, it is also kind of an exit strategy. It gives him an opportunity to kind of turn the page, and it will be more difficult for the unions to continue the protests. You see these pictures of the protests yesterday in front of the Constitutional Council. Today, it's been barricaded. No protests around the council has been allowed by the police.
Well, I'm glad that you mentioned the protests specifically, because we've seen them from various groups of people. I think the most recent, the image that sticks in my mind, was sanitation workers specifically. Talk to us a little bit about what groups, what demographics might continue the protests.
So, of course, these groups, you have actually a big part of the population who feel that they are left behind, who feel that they will actually lose some money as part of this pension reform. And, of course, the left-wing parties, the opposition parties at the National Assembly are very much joining these protests, and all the unions, the 8 main unions in France since January. But as you can see on this graphic, the turnout actually has gone down. Yesterday, you only had about 380,000 people in the streets. That's compared to 1.3 million at the peak of the protests early March. But you have some symbolic actions. For example, yesterday, some railway workers stormed into the LVMH headquarters in the very fancy neighborhood Avenue Montaigne after they stormed into BlackRock last week. So we expect more of this kind of symbolic actions today on the sidelines of these Constitutional Council decisions. And the next big day of protest is planned for May 1st, which is, of course, the traditional Labor Day protests.
Yeah, those last pictures you saw there, as Caroline was just mentioning, the protesters arriving at the LVMH headquarters. Bloomberg's Caroline Conan, thank you very much, joining us there from Paris. The focus for markets, though, Kriti, is going to be on the banking sector, on the US banks, the flow of deposits. Interesting to hear from Walter earlier. Deposit betas is what he's focused on. How fast will those rates have to rise to keep hold of those savers?
Yeah, and that's just not the only piece. Remember, we're still talking about loan loss provisions, the highly awaited comments from Jamie Dimon, of course, trading revenue as well. A lot baked into this report.
Yeah, a lot to focus on as we get stuck into the bank earnings season then. Starts today, continues into the days ahead. That is it for Early Edition. Surveillance is ahead. Have a good Friday. Have a good weekend, everybody. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index. But, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool, and I don't want to move to the suburbs. Like, I want
this episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
We have still a economy in the U.S. which is not landing, right? It's chugging along.
Central bank's ability to finally control inflation is much less direct than might have been thought or hoped.
Inflation has peaked, inflation is coming down, but that's not really the story.
Financial policy tools have worked well in being able to calm markets, but there are risks that are out there.
There are certainly possibilities that further stress could be triggered at some point.
This is Bloomberg Surveillance, live from the IMF spring meetings in Washington, D.C., with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The last day of our coverage at the IMF World Bank spring meetings right here in Washington, D.C. The attention shifts away from this room behind us to the bank earnings kicking off a little bit later on this morning. Stacked lineup for you, just a flavour of some of the guests coming up through the next several hours. It really begins with RBC's Gerard Cassidy. Looking forward to some of the coverage from him off the back of bank earnings. Then Valdis Dombrovskis coming up a little bit later at the European Commission. Mohamed Al-Arian around this desk with us. Looking forward to that conversation on the Federal Reserve and some of the gloomier forecasts coming out of the IMF. And on top of that, Eric Nielsen of UniCredit. Tom Keene, we have to start with the banks, though. Wells Fargo, Citi, JP Morgan, we've all been waiting for this moment. We've seen the data, payrolls and CPI. Now it's about the consequences of the banking shock of the last month.
I think they pull in right together, and I think the bankers will be watching the IMF meetings and the debris that comes out of these meetings. And this is something Jamie Dimon's talked about before, which is macroprudential, the summation of risk. John Lipsky was really identified with this years ago. Summing up all the risk, and then what does it mean for your global banking business? And these are the kind of banks we're going to hear from in the next 48 hours.
Bloomberg Intelligence and others, Lisa, looking to JP Morgan as that port in the storm. Was it truly the port in the storm after the end of Q1 that we saw just weeks ago?
Okay, so I think that there are 2 groups of people who are watching this. They're the economists who are coming out and saying, how bad is the banking crisis? What do we have to worry about? And then there are the investors who are saying, can we start buying yet because they look really cheap and really good? And basically, you have those 2 poles, with JP Morgan probably not giving the answer because they are the big bank that are the port in the storm, and they are not going to be as susceptible to both the outflows as well as some of the stresses and some of the asset classes as, say, some of the smaller regional banks.
Maybe somebody in their shop will look at the BTMM Go screen today and whisper in their ears, it's not over. I I'm sorry.
The deposit flight?
Where's the radio mic? I need a mic right here.
Well, look,
the whispering doesn't work.
Okay, but
it doesn't work like it does in the studio.
But honestly, it's not over. However, what you've priced into this market is a serious decline in profitability. And the question is it valid given how much cash they have and given how much really people still are demanding things?
This is a thing that's a third rail for me. The big banks are minting money, even when they have a serious decline in this, that, or the other. They don't want to tell this story of how much they're making and how much more they're making now versus 2019, or dare I say, John, even through pre-pandemic.
Well, that's why the data on the deposits from some of the big players coming up a little bit later is going to be so fascinating.
Yes.
We got a number for Bank of America. In the midst of all of that stuff that was going on over the last several weeks, let's try and get a number for JP Morgan. I would say this, not my opinion, just look at the stock prices. Since SVB went under, the S&P 500 is up. Banks are trading really, really soft. And Lisa, to your point, I think that captures not just the crisis that we've seen in Q1, but also beyond that, the profit challenge that people are expecting further down the road from here.
So the delineation between the big banks minting money and the smaller banks perhaps more challenged on several sides.
Yes.
Do you see that divide get bigger? Do we get answers to that today? Or basically, will an all clear from JP Morgan, a better than expected projection, mean all clear for, you know, some of the regional banks?
Just getting BlackRock across the screen right now. First quarter adjusted EPS, 793. The estimate, 767. First quarter net inflows, 110.32 billion. The estimate, 83.6 billion. Wow. The stock up just a little bit, Tom. Lisa, you go through the numbers. TK, the stock price up by 2 cents of 1%.
Did they have an inflation forecast in their earnings call today from
Larry Fink?
From Larry Fink.
You think the CEO might offer that, Lisa? What do you see?
Yeah, look, what I'm looking at right now is sort of interesting because you saw fixed income net inflows of $53.9 billion. The estimate was less than $53 billion. So even in fixed income, you saw that increase. Earnings per share, $7.93 versus the estimate of $7.67. So all around, pretty positive. My question is the mix of active versus passive. That has been really a big question for them. Passive is not very lucrative for them. And then also long-term inflows. This, to me, is the interesting thing. Are asset managers coming back, particularly to fixed income, but also to stocks, of $102.7 billion versus an estimate of $84 billion? That, you said earlier, just shocking in terms of the outperformance.
We got to get to our wonderful guest who's been dead on, but John, all I can suggest is there's, I believe, a debt workout of these failed and troubled banks, and I believe the name BlackRock is involved in that crisis. To Lisa's point, is that lucrative?
Let's start the conversation this morning. We can do that with John Stolfus, the Chief Investment Strategist at Oppenheimer Asset Management. John, let's just start off with what you're expecting from JP Morgan, Citi, Wells Fargo a little bit later this morning.
Great. Well, we've got to say when it comes to JP Morgan, you know, we're looking for the main thing there will be how many deposits have they gained? What's the cost of it? What's the provisions? And the same for Wells Fargo and with Citi. With the thought with Wells Fargo, their exposure in the mortgage market, very much a banker on Main Street, what that looks like. I think the real read here for strategists, investors, and traders today is to get the forward view from these banks relative to where they stand today in the aftermath of what we saw with those regionals and looking ahead.
John, you look like a genius. You've been participating in this bull market. You've extended out your timeline, and the timeline is now. When the bears capitulate, A, have they capitulated yet? And if so, when they do, what's it look like? What's it do to the market when the bears capitulate?
Well, I think, Tom, you're really putting me on the spot. But one thing we have noticed is the bears appeared of late to be speaking out of both sides of their mouth. So telling us that they saw this rally would happen and predicting more trouble ahead. I think, you know, there's never a time of uncertainty in the markets, but it looks now like we're certainly on the mend. The market is telling us very much that improvements remain to be confirmed, but they do appear to be on the horizon. The Fed has so far, since it pivoted, has been on the right track, and very fortunately, the consumer and business remain showing signs of resilience. And we think that's what's driving the market. It also, I think, is, you know, trading is fear and greed. when it comes to intermediate to long-term investment, there's always an element of fear and greed that can come up there, but it's need, whether it's providing for retirement in the future, getting your name put on the side of a university, or for a building or whatever, but building assets. And we think that's what the market's reflecting now.
Yeah. Lisa, the Faro building, it has a ring to it.
That works.
3 p.m. I'm going to go over to Faro.
What would be inside it?
Absolutely
Italian
nothing.
street, medieval
It would be
street.
really
Absolutely nothing.
No, you'd have fantastic, very well appointed furniture, very sparsely arranged. Because I think of you as sort of a minimalist. Am I right?
So that's a furniture store.
All right, John, let's move on. I want to talk about banks, not necessarily furniture stores, although we can get there. I'm wondering, you've been optimistic. How optimistic are you to load the boat with bank stocks right now? The KBW index is down about 25% in just March alone. And it seems like investors are all looking and saying, can we buy, please, can we buy? Is this going to be the all clear sign?
Well, it does appear that there has been some kind of flow going back into those areas. Our view is, when it comes to our main exposure to financials, it's within the S&P 500, so it's the big banks, the best of the lot. Yet we have reduced our weighting on financials, the financial sector. We brought it down. My recollection is around 10.8 versus the 12.8, the benchmark weighting in financials, only because near-term volatility and opportunities elsewhere within the sectors that look better to be realized near term.
So what would make you, John, start to increase your allocation to bank stocks, not just the big ones, but also smaller ones?
I'd say just a little more distance into the future, moving into the future and beginning to see that there likely might not be more shoes to fall. We have to admit that both the comments over the course of the last few days from Jamie Dimon and from Warren Buffett related to the potential, not looking for any kind of disaster, but just more choppy water. Near term, we'd have to think, well, we'll stay where we are, about 200 basis points light against the benchmark rate for the financials. But looking to add again, because at the end of the day, the world runs on credit. And as we move towards this new normal with the end of free money, we think it's actually a healthier environment we're moving towards, where it will be less prone, it'll be more prone to looking at fundamentals rather than wild leverage plays.
That's the constructive view. John, great to catch up with you, sir. John Stelford's there of Oppenheimer Asset Management on this equity market on a day where we get a ton of bank earnings. We'll go through them all for you. Citi, Wells Fargo, JP Morgan possibly later this hour. Lisa, I'm looking forward to getting these numbers. I will say this, we've seen some signs of stabilization. We have across several indicators, and I would also say you see that in the bond market as well. The 2-year, we've had these really, really wide ranges. This week, about 15 basis points, and 15 basis points on a 2-year compared to what we've seen over the last several weeks is nothing.
Exactly. So if there is a stability in rates that's giving people confidence that perhaps they can start to assess more accurately both the bank balance sheets as well as what an investment might be worth. We saw yesterday at 4:30 p.m. Eastern, the time when we get the balance sheet of the Federal Reserve, there was real stabilization there, and actually a decrease in some of the term loans that banks have been taking out. So to your point, John, yes, it does seem like things have calmed down in a material way.
I would suggest they're going to kill themselves today to suggest how small they are. They're just, they're going to do everything they can to not show their dominance today in the conference.
Good luck with
calls,
that.
plural. Well, but it's like at the IMF. Have you heard anyone at the IMF mention China? I'm waiting for the first IMF interview where someone says the word China. It's like we don't, there are these signalings of what's not said. Today, they're not going to say how dominant they are.
Well, the focus this morning is on financial stability, and correctly so, because we've got a ton of bank earnings. I will say this about the banking events of the year so far. Do you consider it an event, a one-off event, or the beginning of a process, the start of something? Because I think there's a lot of people that are drawing the conclusion from all of this and suggesting that this is the beginning of a process, that this is going to take time to come through. Then the next stop really is not the bank earnings today. The next stop really is the data we get from the Senior Loan Officer Opinion Survey, Lisa, and I imagine we'll get a flavour of that from the Federal Reserve when they meet May 3rd.
Which is probably the reason why people are going to be more focused on deposits than anything else, because the more they keep going out, the more lending will continue to be constrained.
Just need to get those little data points here and there on where this is all heading. Coming up next, a little bit later from the IMF, Lupin Rahman of PIMCO, Valdis Dombrovskis of the European Commission, Mohamed Al-Erin of Bloomberg Opinion, Eric Nielsen of UniCredit, and, I'm told, joining us shortly, Enda Curran, Bloomberg News, here in Washington, D.C.
Yeah,
over from Hong Kong. Very cool. We'll do that next. Equity futures down about 0.2%. Earnings from J.P. Morgan later this hour.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The U.S. government is struggling to explain how a 21-year-old man in a junior post was in a position to allegedly leak a massive trove of classified U.S. documents related to the Ukraine conflict. Jack Teixeira, a cyber specialist for the U.S. Air Force National Guard, was arrested in Massachusetts and is scheduled to be arraigned in U.S. District Court in Boston today. The New York Times reports he was the leader of a gaming chat group where the documents first appeared. In a testy public exchange with her Chinese counterpart today, Germany's foreign minister said Taiwan's destabilization would be a, quote, horror scenario, if any change in Taiwan's status would be unacceptable. Beijing has ramped up military drills around Taiwan in recent months. Meanwhile, China warned about the risk of falling debris near Taiwan this weekend following a planned satellite launch, denying Taipei's claims that a no-fly zone will be imposed to the north of the island. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
The world economy has proven remarkably resilient, but it is yet to overcome the combination of weak growth and sticky inflation. We project global growth to slow down to 2.8% in 2023.
The IMF paints a very gloomy picture for the global economy. Are you feeling gloomy yourself?
So I'm naturally optimistic and always believe in the ability to make progress. The bigger picture that I would argue for is even with the changes they have made in growth forecasts, they are still forecasting growth for the euro area and for the European Union.
That was the IMF Managing Director there, making comments about the outlook. Very gloomy stuff. And in response to that was the Eurogroup President, Pascal Donohoe. Now, this has been a clear theme of the week so far at the IMF World Bank Spring meetings. The IMF has said one thing, gloomy stuff, and politicians around the world have pushed back. That was the Irish perspective on things. We've also seen that from Chancellor Hunt of the United Kingdom. We've also seen that from the Treasury Secretary, Janet Yellen, a little bit earlier this week as well. Lisa, there's a bit of tension there. The IMF saying one thing, and then repeatedly politicians around the world saying something else.
And politicians, I mean, I know that from the Treasury Department's perspective, for example, they think that perhaps the IMF was overly influenced by their conversations 3 weeks ago when a lot of these communiques were written, which was at the height of the banking crisis. So they feel like it is colored to that perspective and not reflecting the strength that they're currently seeing in the data. That said, there is perhaps an over-dismissiveness by some of the politicians about ongoing concerns that people really have that will really be represented in today's earnings.
That's the diplomatic way of putting it, Lisa. TK,
You're turning to me for the undiplomatic
I would
way.
like the undiplomatic view. Secretary Yellen this week talked about it repeatedly, pushing back against some of the communication coming from the International Monetary Fund.
What's so interesting here is they both have obviously very different mandates, but what's interesting is it's different mandates coming out of something we've never experienced, which is a natural disaster, the pandemic. And what I would suggest we've learned here, and we'll learn today at these meetings, is the pandemic's not over. The stream of the pandemic through here is bouncing around the political view and the economic view as well.
I don't think that was not diplomatic, so I'll give you the not diplomatic view, which is that people are basically saying, fine, it's okay to have an issue with the fact that this wasn't colored right, but it's another thing to say there's no evidence of credit crunch or credit crisis or credit withdrawals whatsoever after what happened with Silicon Valley Bank. Because, as Jenny Yellen said, because pretty much everybody is saying they are seeing a
doing a Gorgiev.
Yeah, it works really well on Bloomberg Radio, just banging a table with someone. Keep it up, it's nice.
I think you will.
Right now, and this is a joy for Lisa Abramowitz, John Farrow, and myself, we speak to someone who, along with all of our team in Hong Kong, have lived COVID far more directly than we have. Enda Curran has held down the fort. I don't know, I think he goes to bed at least at 10 o'clock. He's on air till 10 o'clock, Hong Kong time. And he joins us now in his new duties in Washington as our global economics reporter. It is a wide mandate. Enda, thrilling to see you after 3-4 years of just a disaster. Let me start, before we get to your wonderful definitive article today on fragmentation and resilience, just simple, give us the Hong Kong update as you exited. What's the state of the city?
It's in a better space than it was. The airport has reopened, the border with Shenzhen has reopened, so mobility is much better than it was, and of course a lot of the restrictions on the ground have been lifted, but there's still something of a shadow hanging over Hong Kong. It hasn't recovered to being the finance hub that it was before the crisis, and I think it just has a way to go yet.
And as a reporter, how difficult was it to cover things from Hong Kong over the last several years?
It was difficult because Hong Kong was always a hub and spoke model. When you were there, you could travel right across the region and throughout China. That's what we always did. That was the model. And then suddenly we were told that nobody's going anywhere, and we couldn't go anywhere for 3 years. So it was difficult. We didn't have that mobility to get around, John.
First in, last out to the pandemic in China, reopening this year. That was the conversation at the start of the year. Supposedly, that was breathing some life into the more optimistic view for the global economy. We haven't heard much optimism around here at the IMF headquarters in Washington, D.C. Why is that?
There hasn't been much optimism. China is contributing to some of the better news here, though. So, for example, yesterday, Geeta Gopinath saying India and China will drive half of global growth this year. But there's no doubt the bigger picture is one of a long worry list. Some people talking about a Bear Stearns style moment. Back in 2008, after that episode, things were quiet. Everyone thought maybe the worst for the credit crunch is over. So some people here are warning maybe we're in that quiet period now. 6 months from now, all these higher interest rates will start to surface and cause pain for the global economy.
Are more people worried about the potential for a credit crunch here, or are more people worried about the potential for having to choose sides with respect to the polls around China and the polls around the U.S. and Europe, or possibly just the U.S. and Europe separately, and what that means politically?
Both, exactly. I think the US story is all about the credit crunch. Are banks going to pull back lending or not? That doesn't seem to be a global story. But this global idea of fragmentation and pulling the blocks has been a very strong theme here, and I've been surprised that it's been much stronger than I expected. So you've got this whole conversation going on about how rich nations need to get their supply chains in order so they're ready for the next pandemic or the next conflict, whatever it is. But poor nations are saying, wait a minute, that fragmentation is going to be very bad for us. There's definitely a realignment going on in front of our eyes, actually.
Do we have a sense of where the IMF's priority is with respect to whether to acquiesce to some of China's demands and certain debt restructuring that is currently going on and that's kind of holding a number of pretty major developing economies hostage almost in this sort of limbo between defaulting or not? Do we have a sense of how hard of a line the IMF is willing to strike at fear of perhaps alienating China?
very delicate dance going on that front this week. It's very important. Beijing made some comments overnight, by the way, making it clear that multilateral lenders need to be in the mix when it comes to any haircuts or shake-up of debt. The IMF seems to be holding the line that they're not going to be in the mix for haircuts. So as multilateral lenders take a different role, they are crisis lenders. China, of course, making the point that everyone needs to be in the mix for taking the haircut. So that's one of the key talking points.
In your wonderful article this morning, Gopinath, we don't have any Chinas anymore. To me, that's the heart of the matter. You know the run rates of GDP there. What kind of run rate is in your head for China forward? Is it a 3% gloom? Do they get back to the new normal 5-6%? Or frankly, can Chengdu do better?
I think people are saying 5% this year is possible, Tom, but the go-go years are definitely gone. Now, the optimists would say, wait a minute, it's slower growth on a much bigger base, a much bigger economic base than China was even 10 years ago. So there is that argument. But anybody looking to China for the go-go years of double-digit or high single-digit growth, that era is gone.
You mentioned the tension between wealthier nations and poorer nations over this race to subsidize domesticating supply chains, bringing everything home, so to speak. There's also some tension between rich nations, rich blocs, Europe, the United States. And it's Europe and the United States that we need to focus on a little bit more. Adam Poston at the Peterson Institute joined us earlier this week, and he was warning about where this could ultimately head. Is that a concern that you share, Enda?
It's yet another one of the subplots going on here. Like you mentioned, you've got the rich world versus the poor world, and within rich, the rivalry. You know, the U.S. Inflation Reduction Act is causing a lot of tension among key trading partners, especially among the Eurozone members here. They're talking about this race to the bottom in terms of subsidizing and tax treatment. There absolutely is tension. It's a new era for industrial policy, even among the rich world, and that is a key issue for everyone here.
Have we given up on free trade and capitalism? Is that over?
I wouldn't say we've given up on it, but there's certainly some rethinking going on. And I would have to say, if you zoomed in here without knowing the background, you'd say this is a very different IMF meeting to say even 10 years ago.
Amazing. And wonderful to have you with us in Washington. Great to see you. Enda Curran there of Bloomberg. Tom, what a situation. I think it was Doug Redeker earlier this week who said there's no big theme this week. No big theme, just 10 different narratives that everyone's trying to push simultaneously.
Well, yeah, and I would say there's narratives based on many theories, and it goes back to the original. Some of this is absolutely original, and some of it, dare I say, is actually in the textbooks. But people are flying theoretically blind here. It's not just about the back and forth. It's about the foundational misunderstandings out there right now.
Enda is highlighting correctly, I think, the big risk at the moment. Just the idea that you have the banking shock we've had over the last month, Lisa. You don't see spillover immediately, so you start to sound the all clear. I think there's a real risk involved in that, not because I believe that this is going to get a whole lot worse from here. I'm not making a judgment on that. I just think it's too soon to make any judgment at all.
Well, and I think what's really highlighted here, and John Lipsky really was talking about this, is the lack of a unified response to a potential credit crisis. Back in 2008, everyone was really focused on trying to shore up the global financial system. Right now, whose rules are we playing by?
Yeah.
What are we going to go for here? Well, yeah, good luck with that. I mean, no offense, Switzerland, but I'm just wondering, you know, is that really the existential angst here? Are we all following the same rules, or are we all just in deep competition with one another?
It's a really big morning here in Washington, D.C. A lot of the attention, though, is going to be looking elsewhere. At least so far this morning, we'll be focused on the banks. We've already had BlackRock. We'll look ahead to JP Morgan, Wells Fargo, and Citi. JP Morgan should come a little bit later on this hour. Go against all of that on the S&P 500. Equity futures just a little bit softer, lighter, lower, down a little more than 0.1%. Live from the nation's capital, this is Bloomberg.
the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes, or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Waiting for numbers from JP Morgan, Citi, Wells Fargo should get those numbers, those earnings for a messy first quarter for the financial industry. Those earnings dropping over the next 90 minutes or so. Going into that, your equity market shaping up as follows this morning. And good morning to you all just tuning in on TV and radio. Equity futures negative 0.2% on the S&P 500. On the Nasdaq down about 1/3%. In the bond market for once, a tight trading range. It's all relative, of course, but a trading range of about 15 basis points on the week on a 2-year. 395.80, your 2-year down a single basis point. But the standout for the price action of the week so far is in the FX market. Dollar weakness, euro strength. Earlier on today, euro dollar just short of 111, 110.76. The intraday high and also the year-to-date intraday high, and the highest level I think we've seen on this currency pair going all the way back to last spring. The dollar index now trading with a 100 handle. TK, the dollar index 100.88.
First thing I looked at this morning, John, we've not printed a 99 handle yet. We've come down into the 100 level. It's a persistency. Is it a grind? I'm not there. It's not technically a grind of weaker dollar, but it's certainly story-driven, and you've just got to see what the news flow is to see if maybe we finally get this dollar breakdown many have looked for.
Taking out the levels we saw in early February, Tom. In early February, off the back of a really punchy ECB news conference with President Lagarde, and from here, that's where the debate is at the moment on the rate differential side of things. The Federal Reserve has signaled it's one hike away from finishing, at least that's in their projections, implied at least, and the ECB is basically communicating there's more work to do. I would say there has been a subtle shift, though, in the ECB officials that we've heard from so far this week. Just maybe softening the language a little bit, talking up 25 perhaps instead of 50, and then into the unknown.
I would suggest as we see the central bankers parade around here, and we do, Jerome Powell walking by our set yesterday, we got a big wave from him before he played in the band behind us. You know, Jerome and the dot plots, did you hear
I think it was
him?
Jay and the dot plot, yeah.
Yeah, well, that depends where they're playing. But, you know, Lagarde is not focused on that stuff. Lagarde is focused on Europe right now. I think she's less focused on the IMF chit-chat, and as you say, much more focused on the mystery of an absolutely original European experiment.
And I would say this, Lisa, for Lagarde and for other European officials, this isn't the Europe that they feared 12 months ago. This was a best-case scenario. To sit here
absolutely,
and hardly be talking about the European energy crisis. We've been here now, what, for most of this week?
Well, they have a war.
You've talked about not mentioning China. How many times have you had a conversation about European energy through this week? Once?
Not even.
Not even? Zero?
Yeah, I mean, basically, they've got a Hail Mary pass. Basically, you know, they got a warm winter. They had energy prices that were significantly lower than they expected, and China reopened earlier. I mean, this is both of them, and we saw from the Hermes results that Chinese consumers are very much buying, and they're buying in luxury. So here's the question. Is this truly a European strength story? I would argue it's not. I would argue that what we have seen over the past couple of sessions is very much a dollar weakness story, and it comes in the heels of the concerns that the credit crunch is going to disproportionately affect the U.S. economy in a way that the European economy will not feel, and that tech-heavy sectors aren't going to necessarily lead in the same kind of way in the U.S.
I'm going to rely on our FX experts, and I think they're going to look at rate differentials and just say, and to me, with Mr. Gentiloni yesterday, the former Italian prime minister, now holding court in the Europe, he was good on Juventus, by the way. But what was so important about what he said is I mentioned eurosclerosis, and I thought he was going to throw his coffee mug at me. And that this is a sensitive issue for the Europeans. Is this a new Europe? Is a backstory here that's really not addressed.
Lisa mentioned Hermes year to date, up 36% year to date.
Yeah.
What a run some of those names have had, Bramo.
Did you see the year-over-year increase in profits? I mean, it's insane.
Phenomenal.
Double digits, incredible. I mean, it's not
Asia,
like
Europe, flying back over to Europe from China to do the spending again on luxury items.
Yeah, well, it's there.
It's back.
Let's go to someone who's very aware of that. While wearing Hermes this morning is Shonali Bassick, and we're thrilled that she's with us this morning. Shonali, Wells Fargo, I want you to point this out for our international audience and for our domestic audience. And this is the idea that these banks are each different. What will be the signal from Wells Fargo that you will want to see?
The deposit number, of course, will be very interesting because we know that in this kind of crunch we've seen among the regional banking system, there has been a flight to quality. And so the JP Morgan deposit number will be interesting. This is a number, Tom, at JP Morgan that has been decreasing quarter over quarter for the last few quarters. The last time we saw an increase for JP Morgan was into the first quarter of 2022. So it's been a few quarters. For Wells Fargo, did they get the same love that JP Morgan may have gotten when customers pulled the deposits from the likes of Silicon Valley Bank into
What's your
the bigger
guesstimate
banks?
on that? That's really well said, Shonali. What's your guesstimate? Is Wells Fargo part of the love boat of big banks seeing gazillions come in?
It's hard to say, Tom, until we see the numbers. Listen, Wells Fargo has been a weaker bank than a lot of the other large banks we've seen in the United States. And remember, from Silicon Valley Bank, as well as First Republic, a lot of these are wealthier customers that tend to bank with the likes of a Morgan Stanley or a Goldman Sachs or a JP Morgan. So they may not have seen the same love, especially with this movement away from deposits more largely into money markets.
Shonali Bassick to help us with the banks here forward. Always helping us with the banks is Gerard Cassidy, head of U.S. Bank Equity Strategy and large cap bank analyst at RBC Capital Markets. Gerard, an open question. What is the first thing you will look at from Fortress Diamond this morning?
I think, Tom, the first thing we're going to look at is what's going on with net interest income and the net interest margin. We certainly will also be looking at deposits, as you were just discussing. But it's going to be difficult to figure out until we start to hear commentary from the bank because, as you know, as the biggest bank in the country, they are front and center with quantitative tightening, meaning deposits are coming out of the banking system, which QT was intended to do. So though they may have received benefits from the Silicon Valley depositors, which they did, that may be offset by QT taking deposits away from them and their peers. So net interest margin, net interest revenue, and then deposits, and then, of course, going to the capital markets businesses.
Jared, I just want to pick up on a bank like Wells Fargo. Tom was talking about that briefly. Let's build on that a little bit more. Wells Fargo essentially had its growth capped, and I wonder if having your growth capped is a good thing, given what we've seen develop over the last couple of years.
John, you make a good point, and that's one of the reasons Wells may have not have seen much in deposit inflows because their growth is capped, and it's capped really on the deposit side. They've done a very good job over the last 3 or 4 years in remixing their deposits to the consumer, away from the wholesale. But as you pointed out, with their growth being capped, you would think that should we get into a credit cycle, they should benefit more maybe than some of its peers because of that cap on growth.
We're getting in just about 15 minutes here or less. We're going to be getting JP Morgan earnings as well as PNC Financial. Which are you more interested in, Gerard, given the focus on regional banks?
Lisa, you're absolutely right. I think the PNC number might be more important because it'll give us a read into other regional banks. Now, granted, they are a very large regional bank. And as you probably know, every Friday afternoon, we receive the deposit and loan data for the industry from the Federal Reserve. And the top 25 banks, PNC, of course, is part of that. The large banks actually saw an increase in deposits the week of the Silicon Valley failure or the week after. So I would say their deposit numbers are going to be very interesting, along with, again, the margin and as well as net interest revenue, because as you all know, last year, that was a tremendous driver of earnings for the industry. We expected it to slow down this year. It may be slowing a bit faster than we expected before the Silicon Valley issue.
Gerard, if you look at an economist's work, they're going to be focused on credit crunch. They're going to be focused on the potential implications for the economy over the next few months. Stock traders are going to say, can we start buying stocks again? Can we start buying the banks, considering how much they've sold off? What are you looking for to determine whether this is going to be a story of optimism around stocks that have already been significantly beaten up and devalued versus a broader economic slow malaise that's going to take months to carry out?
You put your thumb right on it, because when you take a look at the stock action since the Silicon Valley and Signature Bank failures, the banks have suffered dearly as a group. That deposit flight is over, in our opinion. So the factors for driving those stock prices down should really not be as much of an issue. But then we're pivoting to what you just talked about, which is the outlook for the economy. And that's where it becomes more questionable. We receive questions now every day about commercial real estate and the impact it could have on the banking system should we go into some real downturn. So I think the outlook from Jamie Dimon at JP Morgan, as well as the other banks, will be very important on the economic outlook, more so than on the deposit flight issue.
Gerard, the Federal Reserve struggled to change its outlook over the last couple of weeks. Why will the C-suite at a bank like JP Morgan be any different?
I think they got a better pulse on the economy, especially JP Morgan. Obviously, the Federal Reserve receives enormous amounts of input from many different places. But JP Morgan, Citigroup, PNC, Wells, all the banks that are reporting today, they're on the front line. They see it every day in their customers' behavior. So they'll have, I think, a better feel for what's going on. And I think that will give us a real-time feel as well. And I think we're going to see that, yes, things are slowing down, but I think the stocks have over-discounted it, and there could be, we expect, these numbers today to be decent numbers, maybe even good numbers, and the stocks hopefully will rally on this news.
Gerard, thanks for being with us. I know you're going to stay close and break down some of these numbers when they drop. Gerard Cassidy there of RBC, lucky to have him with us. Just to go through the morning for you, this is what the lineup looks like. Live from the IMF, Lupin Rahman of PIMCO, Valdis Dombrovskis of the European Commission, Mohamed Al-Erin of Bloomberg Opinion, and a good friend of this program, of course, joining us around this table, together with Eric Nielsen of UniCredit a little bit later. That's the lineup from the IMF. The attention going into the market open firmly on the bank earnings. Through the next 60 minutes or so, we'll hear from JP Morgan, Citi, and Tom Wells Fargo.
Really rich and really different as well. I've got to admit, as I think Mr. Cassidy alluded to, I'm really focused on JP Morgan just because of the scope and scale. And I'd also note that they have a projection into Europe that I think gives them a knowledge base the other American banks really don't have.
And then financial institutions, Tom, some of which an audience outside of America might never have heard of before. You start to get a flavour, Lisa, for the regionals a little bit later on this morning.
The fact that Gerard Cassidy said that PNC will give us the real insight into the regional banks that really hold the question about the fate of lending in the commercial real estate market in some of these smaller consumer lending areas is incredibly important, and I believe that we're getting some of those PNC numbers
One of my big questions is very simply, do they speed up what they sped up during the pandemic? Is it a new time of evolution for them?
First quarter revenue, PNC Financial, $5.6 billion. The estimate, $5.61 billion. Share buyback activity expected to be reduced in the second quarter. I'm going to build on some of those headlines in just a moment, and we'll get you the JP Morgan results when they come through. Live from Washington, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. is pressing the need for allies to coordinate against economic coercion, not just military threats. This as Japan prepares to host top diplomats from the Group of 7 nations amid heightened tensions with China. U.S. Ambassador to Tokyo, Rahm Emanuel, saying, quote, that coercion piece is important. China is set to be a key focus of discussions at that meeting. China's mega banks are planning at least 40 billion yuan of bond sales, kicking off a major funding push to comply with global capital rules by early 2025. Bloomberg has learned the Industrial and Commercial Bank of China and its 3 closest rivals are planning to tap domestic debt markets to sell a new category of total loss-absorbing capacity bonds as soon as June. Supreme Court Justice Clarence Thomas and relatives sold 3 Georgia properties that include Thomas's boyhood home to GOP megadonor Harlan Crow in 2014. That's according to a report. ProPublica says that Thomas didn't list the real estate sales on his financial disclosure form that year or report his extensive travel financed by Crow that occurred over 2 decades. Dozens of advocacy organizations and children's safety experts are calling on Meta to terminate its plans to allow minors into its new virtual reality world. Meta is planning to invite teenagers and young adults to join its metaverse app Horizon Worlds in the coming months. But some argue that young people could face harassment and privacy violations on the virtual reality app, which is only in its early stages. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
I think we're not over yet. How bad it gets, we will have to see. I think this problem is more systemic. We're sort of putting it on a few banks. Uninsured demand deposits went up by trillions of dollars during the pandemic, and they haven't come down. So the sources of fragility are there. There will be, problems going forward. The question is, as you pointed out earlier, how does this play out in terms of the credit crunch, which is coming?
The sources of fragility are there. Just a fantastic exchange with Raghu Rajan, the professor at the University of Chicago Booth School and former IMF chief economist. We had numbers from PNC just moments ago. Wells Fargo dropping right now, still waiting for JP Morgan. Shonali, it's your job to run through it for us all.
We're looking pretty clean for what could have been a messy quarter so far. Remember, Wells Fargo was trading below its book value, and you're having them this quarter now meet on estimates when you look at average loans, when you're looking at net interest income, they're above estimates. Efficiency is just in line, a little better than estimates, and mortgage banking is a little above estimates, actually. So looking a little clean here on Wells Fargo in a quarter where we've had real sell-offs among banks that were weighted towards the consumer. Similarly, at PNC, you're actually watching the deposits be better than estimates a little bit. So a lot of the pain that was expected is not as bad as was initially thought.
Shonali, what I noticed in the verbiage from PNC, and maybe we'll see it from others, is the dreaded word stable. Everybody's very stable. It's stable Friday here on bank earnings. Define what stable means to this set of banks.
Yeah, we are skating on ice in some ways, aren't we? Because we're looking at expectations of charge-offs to rise at a lot of these banks. We are looking at some real worries underneath the financial system. So stable here means, you saw it in the wording that John had used a little earlier, this idea of reduced buybacks. You're watching banks trying to get through any potential future storms. The deposit number is a big deal for PNC, but when we look also, the part that Gerard Cassidy was bringing up before is profitability now is becoming under pressure for a lot of these firms. While they're coming in line with estimates, have we reached peak net interest margins as we're watching more pressure on the lending books start to accrue? That is certainly the case for both of the banks that have reported so far, that they are lower, those net interest margins, than they were a quarter before.
Shonali, can you just help us sort of work through these results and what to sort of keep an eye out for? I'm looking at PNC shares up almost 4% in pre-market trading right now. What does it mean when we hear that these banks borrowed more from the Fed's emergency rescue efforts, as PNC did?
We know that has had a huge stigma for such a long time, Lisa, except when we're watching more of these banks start to tap the Fed for more liquidity here, it's not seen as bad as it may have been seen as in the past. And that is because we know that the banking system at large is trying to get through this storm together. And so we're seeing more banks borrowing from the Fed, but as we saw before, the data suggests that that's starting to cool down. And when you see numbers like this, the deposit flows being stable, as you say, Tom, that maybe some of that pressure is starting to ease for now. Remember, this is a Pittsburgh-based bank, so not facing some of the same California issues we've seen in that system.
Well, Shonali, you're the only one I know who read Jamie Dimon's letter cover to cover, so we'll look for you on the JP Morgan earnings here in a moment. Gerard Cassidy, of course, still with us with RBC Capital Markets. Gerard, the heart and soul of this is the distance between these five banks, these super regionals, and I guess 4,000 other banks. Where are we in 3 years? You're sitting with an institutional investor that's looking at combinations and transactions. Where's that 4,000 number in 3 years?
Tom, I think the simple answer is it's obviously lower. When you and I started out in the 80s, we had over 18,000 banks in this country, and we're now down to about 4,600. And so in 3 years, could we see, another 300 or 400 be acquired? Yes. The hard part today, though, Tom, is the marks. As you know, in purchase accounting, you have to mark the balance sheets to market. And because of the interest rate environment, the interest rate marks, I think, are an obstacle to get deals done. But once that calms down, I see M&A activity picking up in 24 and 25. So in your 3-year time period, it wouldn't surprise me if another 300 or 400 banks are consolidated away.
And John, JP Morgan Chase, I don't think can buy up some of those banks. I think they're precluded from that.
Get results from JP Morgan right now, up in a pre-market by 1.4%. Shonali, you've had 60 seconds to look at this. What stands out?
There are a few things. I know I'm not supposed to do this, John, but the fact that they beat so heavily on fixed income is significant for JP Morgan. Remember, the investment banks have been faring much, much better in trading than you've seen the rest of the banking system hold up. So I do want to hang on to that for a minute there. But I also want to take a look here, because when you look at the deposit number over at JP Morgan, it is pretty much in line with expectations, but they are not seeing this massive jump or anything like that. Remember, we've been talking about this really secular decline that we've seen in regard to interest rates, the decline in deposit relative to the rise in interest rates and that movement to money market funds. So it's not like JP Morgan is raking in deposits. Remember, those deposit rates have been very low at JP Morgan as well. Lastly, I would say something interesting about JP Morgan is if you look at the total loan number, it is actually a little bit softer than it was the prior quarter. I think there are a lot of questions here because JP Morgan is going to set the tone here about risk appetite in the market and the propensity to lend. So that is a pretty fascinating number coming out from JP Morgan. It is not specific to how JP Morgan will fare necessarily in trading today, but it is bellwether for the economy to see what their loan book looks like. We'll be watching as more of their documents come out to see what their net interest income projections are for this year as well, given that concern that profitability from lending might be under pressure across the banking system.
Chanel, we've got to get to Gerard, but very quickly here, I think this is so important. What a revenue beat. I mean, PNC was with a low single-digit revenue dynamic, I believe down a little bit. JP Morgan with a really substantial revenue beat. What does that signal to you?
Oh, the revenue beat. Sorry, I thought you were talking to Gerard. But no, the revenue beat is interesting. Remember, and that's why I kind of pointed here to the fixed income trading beat that you're seeing over at JP Morgan, because they are making a little more money from businesses that we thought were going to be way more under pressure this quarter than they are showing. Remember, the markets are still volatile, and the buy side has had a significant amount of pressure coming into this year that they thought that they were going to be all clear, Tom. So it is significant here that you're seeing them beat on certain business lines, including investment banking, which has been weaker on the year. But again, a flock to quality comes for both the consumer as well as the corporate customer here. And you're seeing JP Morgan really be a beneficiary of that.
Gerard Cassidy with us as well with RBC Capital Markets. Gerard, what are they not saying this earnings cycle? These major banks, they have to spin the message. What do they not want to talk about? I would suggest it's just their scope and scale.
I think, Tom, that they want to make sure that you don't scare the market by saying that they're taking in all these deposits from smaller banks. And as Shanali pointed out, the deposits, as we were chatting just a moment ago, there are inflows and outflows. And one of the biggest outflows for JP Morgan is QT, as we were just chatting about. And so I had to double check my numbers, Tom, because the revenue beat is amazing. It's not just in fee revenues. This company's net interest income quarter to quarter was real strong. And I think Wells, I looked at it quickly, Wells's revenues beat. You mentioned PNC was slightly below, but boy, so for where the stocks were trading last night at the close versus these numbers are much better than where the stocks were trading. So far in the three companies that have put them out this morning.
Gerard, just quickly here, what do you make of the increase in the loan loss provisions that we saw both at Wells Fargo and JP Morgan, seeing $1.1 billion set aside for that?
Yes, it's with the new accounting and that we all are familiar with, CECL accounting, current expected credit losses. You have to look through the cycle, and obviously through the economic cycle, that is. And I would say with the economy looking weaker post Silicon Valley, I think this is evidence showing up in the provision for loan losses. We have to remember too, though, credit quality still is very strong for all these banks. There's no evidence of any collapse in credit, but they have to prepare now in anticipation of greater credit losses, which is likely in an economic slowdown or recession, which we are likely going to see later this year.
Hey, Gerard, great to catch up with you. JP Morgan agrees. Gerard Cassidy of RBC Capital Markets. JP Morgan, increased probability of a moderate recession, and yet they see full-year net interest income at about 81 billion, had seen it at about 73. So, make sense of that one, Tom.
Oh, Cassidy nailed that. I'm sorry, this revenue beat to me is just extraordinary. That deserves a lot of study. That'll be front and center on the research conference call.
It's a beat from JP Morgan. The stock's up by 3.5% in the pre-market. Wells Fargo up about 0.5%. Citi building on the gains as well from Washington. This is Bloomberg.
So most actors are thrilled if they have one part like Rocky in their whole career.
Yeah.
You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No, Rambo was a novel by David Morrell. And I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone. and it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was, in the original screenplay, was horrible. He was a psychopath. He killed children, he killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And he said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy.
Because
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rating World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
We have still a economy in the U.S. which is not landing, right? It's chugging along.
Central bank's ability to finally control inflation is much less direct than might have been thought or hoped.
Inflation has peaked, inflation is coming down, but that's not really the story.
Financial policy tools have worked well in being able to calm markets, but there are risks that are out there.
There are certainly possibilities that further stress could be triggered at some point.
This is Bloomberg Surveillance, live from the IMF spring meetings in Washington, D.C., with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Just a fantastic lineup of guests inside the corridors of the International Monetary Fund global headquarters in Washington, D.C., and outside of these corridors as well, from New York, looking at these markets. From Washington this morning, good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures on the S&P 500 still a little softer by 1/10%, but we've had numbers from PNC, stable, from JP Morgan, better than that, TK. That's a big beat from JP.
And even Wells Fargo as well is getting some love here. It's going to be a fascinating earnings season in all, led by the banks and, dare I say, led by tech as well, over the execution given the cards they've been dealt. And certainly the tone this morning is, particularly on the revenue beat that Gerard Cassidy talked about, this is a JP Morgan that's executing.
Stable is better than existential crisis, and that's what some of these banks faced over the last month. This move in the pre-market suggesting a lot of people are relieved as well. JP Morgan up by 4.5%, Wells up by 1.2%. We'll get numbers from Citi in a moment. That stock's up by 1.6%. But this is not a judgment on the future yet, Lisa. The coast is not clear. Jamie Dimon at JP Morgan saying financial conditions will likely tighten. I think that's an assessment a lot of people listening to this program will share.
There are two classes of people listening to these earnings. There are the economists looking for how deep the pain might go in the U.S. economy, and there are stock investors who are wondering when they can buy. If they were looking as to when they could buy and whether they could see some sort of increase in valuations, they are getting the signal, at least today. And if you look at PNC shares, they are up 5.4% in pre-market market trading. So exceeding the pop you're seeing in JP Morgan on this sort of not all clear, but better than expected. That said, it doesn't mean there isn't going to be a real economic ramification from a reduction in lending.
From New York, joining us now is Bloomberg Wall Street correspondent Sonali Basak. Sonali, just go through the numbers for us piece by piece this morning.
For a second, because this beat is pretty incredible in a quarter that people were very worried about the economic outlook. But guess what, John? Their returns on tangible common equity of 23% are just remarkable, and that is with JP Morgan increasing headcount. So somehow they're keeping a handle on costs here, boosting headcount, as well as increasing their net interest income outlook for the year in a year where banks were not expected to get the same boost from interest rates as they were in prior quarters. Now, also, when you look at PNC, Lisa's point on stable is very important here because they're the first of the big regional banks to be reporting, and their deposit number is a little better even than what Wall Street had expected. So you're looking at relative stability here and them being really rewarded for some caution when they're going to be reducing their pace of buybacks coming into this quarter. And then you have Wells Fargo as well, also coming in just really in line with expectations, beating on some levels here. So this stability to come out from these banks at the start of this earnings season is welcome when you had Wells Fargo and Bank of America coming into today trading below book value. So can they regain some of that stock market value here, given that they have made it through the worst so far?
Hey, Sonali, stay close. One more bank still to come. Citi. JP Morgan right now up by more than 5%. You've heard from JP Morgan, we've heard from Wells Fargo, we've heard from PNC. Just a flavour of the regional banking story. Citi still to come a little bit later this morning. Should get that in the next 60 minutes or so. Sonali Basak there out of New York. Joining us now is Ken Leon, the Director of Equity Research at CFRA. Ken, you've had about 10, 20 minutes to go through some of these numbers. What stands out for you?
These banks are not only resilient, but they're making money. So what we did see, particularly in the consumer area, is strength in the private and the wealth management. Credit card was flat. Capital markets are strong, and I think maybe the conversation has been missing this, is that we're going to see these banks do better ahead. We hit the trough. So I would say the worries about the large banks is over. They're resilient, and even if and this is the first time too, deposits are down, but loans are up. That's really the first time that metric changed in maybe 6 quarters. Perhaps that's a good thing. And quietly, JP Morgan is offering you, John, a 5% one-year CD rate. So even if the deposits go out, they're quietly taking money from smaller banks.
Hey, Ken, you've been following this for decades, and the tone changes. You can go back and look from annual report letters from 15 years ago that are embarrassing in their vogue. Is the vogue now for these banks to talk down their scope and scale? I look at the revenue pop in JP Morgan, and I would suggest his government affairs people are telling Mr. Diamond, shh, don't let anyone know. Are they almost too successful?
You're spot on. And the issue here is really the messaging, and that it's not that we have too much capital and we're restricted, because there's going to be regulatory costs and more regulation as relates to holding capital, especially exiting Basel III endgame. So the story here really is making sure investors are comfortable that they can get dividend growth and buybacks at levels commensurate with the last 2 or 3 years. And that's going to be really the debate they have behind closed doors with Michael Barr and the bank supervisories on the stress test. Not this year, but next year. So that's the important thing for investors, is knowing that these banks are not only resilient and profitable, but they can get a total return on their investment.
Ken, I want to build on what Tom is saying, because he's absolutely right. We're talking about credit crises and the potential for some sort of fragility. And we're talking about JP Morgan expecting to bring in $81 billion of net interest income this year, which is far above what people were expecting. They are minting money. At what point are we expecting some of the discussion from the C-suite to be gloomier than perhaps it really is, to perhaps divert a little bit of attention from what's going on in the bottom line?
The bottom line speaks for itself, and that's what moves markets. Gerard was correct that we may have hit peak net interest margins, But looking back over the last 5 years of the large banks, only JP Morgan was able to grow net interest income from 2017, mostly because they expanded their loan activity and their book. But overall, the picture is good. And that was our point in the middle of March, is that obviously there was tremendous concerns about financial stability, but it was a great time as some of the large banks have sold off. And we took advantage. And I think the capital markets still can give you a strong punch in the second half of the year because right now we're at the trough in terms of underwriting and also mergers and acquisitions.
You know, Ken Leon's dead on, and Lisa, I think this is so important. Max Abelson tearing this apart for Top Live right now. This is a surreal conversation, and Mr. Leon and Cassidy touch upon this. Their return on equity is 18%. They are minting money. Shh, don't let anyone know.
So how much is this a JP Morgan story, and how much is this a broader banking story? And can that really will ultimately be the question through the rest of this year, as perhaps people parse the differential between the JP Morgans of the world and all of the, I don't want to say Silicon Valleys of the world, but perhaps the First Republic banks of the world?
There's two iterations here. The first one is if you're diversified and you have large capital markets businesses, you're going to outperform. The second part of this is really related as you look at not only the super regionals, but smaller banks. They have a narrower total asset mix, a higher percentage of commercial real estate loans and commercial loans. And the consumer will probably slow down a bit in the second half of the year. We saw that in the JP Morgan results on credit card revenue.
Hey, Ken, this was wonderful. Wonderful to hear from you. Ken Leon there of CFRA. Citi coming up a little bit later. Ken's going to stick with us for that. He's going to stay close. Let's just stick on this price action.
Please.
JP Morgan's up more than 6%. Wells Fargo's up 2.4%. Citi's up by 3%. On the same day that JP Morgan and Jamie Dimon is telling you there is an increased probability of a moderate recession this year, they're raising their outlook for net interest income by about $8 billion.
On radio, you can round it up to up 7%. Do you understand? It's like a tugboat, single tugboat spinning an aircraft carrier in New York Harbor. Can you imagine the inertial force it takes to pop JP Morgan pre-market 7%?
It's pretty incredible. Let's see if it sticks. Citi's up by about 2.8%. Citi, the next bank to deliver earnings. Lisa, there's a couple of ways of looking at this. One, okay, decent numbers, stocks up, but ultimately the coast is not clear. We need to wait to see how this regional stuff spills over into the broader economy. That's a process that may well have started. There's another way of looking at this, and some people might say the coast is clear, the labour market's still resilient, inflation's still sticky, the Federal Reserve needs to do more. Let's go 50.
So people, this has been the sort of problem with this moment, and the reason why it's been so deeply frustrating for everyone trying to create a narrative or talk about something new every single day is because you can basically say whatever you want and then have some data to back it up. And here you have the banks telling the same story. We are in this sort of, purgatory where we're not sure where we're heading. What is clear to me is that banks are clearly resilient, as you can see in this data. What's not clear to me is whether the consumers are. They are talking about the increase in loan losses, in loan delinquencies. It probably more so at a Wells Fargo, say, than a JP Morgan, with mortgages much more present. That is going to increase as we see it in growing number of the regional banks start to report.
Did you see the deposits from JP Morgan? It's basically its own country.
Yes.
2.38 trillion. The estimate 2.33.
John, that's a faux pas, as they say. You're not supposed to say the scope and scale of these things is truly transnational.
Just phenomenal.
The answer is you're correct. They are. This is one of the biggest problems, folks, with financial media. I won't mince words about it. We underplay the scope and scale of the mass of these banks. They're virtually Canadian-like in their dominance of the system.
Well, and it also raises this issue. Are they getting deposits from some of the regional banks, or was this organic growth? Because they did actually increase more than people expected. So that's, I think, something we're going to be, well, I mean, just saying, theoretically, I think it's probably.
What do you think happened the week after SVB?
No clue.
1-800-JAMIE?
100%. Absolutely.
Let's move some money. Coming up in the next hour, Mohammed Al-Aaron of Bloomberg Opinion and Queen's College, Cambridge, around this table from the HQ of the International Monetary Fund. Equity futures just about turning positive on the S&P 500. The numbers from the banks so far pretty decent relative to some downbeat expectations. The banks rallying in the pre-market. Numbers from Citi in the next hour.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Chinese leader Xi Jinping met with Brazilian President Luiz Inácio Lula da Silva today in Beijing. The trip, which comes a little more than a month after Lula visited Joe Biden in the U.S., shows the importance given by the leftist leader to both countries. His visit to Huawei facility on Thursday sent a message that he won't pick sides in the U.S. fight against the Chinese tech giant. The French government says around 380,000 people took part in a 12th day of protests against President Emmanuel Macron's pension reform plans. Protester numbers from sectors including transport were lower than last week, with the Paris Metro and international train services like Eurostar operating almost normally. France's Constitutional Council will issue a ruling on the law this evening. A health analytics firm is warning there's a more than 1 in 4 chance a pandemic as deadly as COVID-19 could hit the world within the next decade. Airfinity says climate change, growth in international travel, and the threat posed by zoonotic diseases are all contributing to that risk. And a setback for Boeing just as it ramps up production of the model that's a major cash cow for the company. The U.S. manufacturer is pausing deliveries of some 737 MAX jets to address a production issue on the rear end of some aircraft. Shares fell as much as 5.3% after Boeing said it expects deliveries to decline in the near term as it inspects those affected jets. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Our forecasts are significantly better than the IMF forecast, but what I should say is that last year we were the fastest growing economy in the G7. We are very confident about the UK's medium and longer term prospects.
What Jeremy Hunt would recognize is that we've actually had a substantial upgrade for UK for this year. It's just that we haven't gone as high as maybe some of the other forecasts are, but we've actually seen things turn out better than expected in the UK.
Just a tiny bit of tension between the International Monetary Fund and the rest of the world. That's one snapshot example of that, with Jeremy Hunt, the Chancellor of the Exchequer out of the UK, and Gita Gopinath, the IMF First Deputy Managing Director here in Washington, D.C. From the nation's capital this morning, good morning to you all. Your equity market's shaping up as follows on the S&P 500, just about unchanged. We'll continue these conversations around the IMF as we wrap up our coverage, the IMF World Bank spring meetings today, and look ahead to a conversation with Mohamed Al-Erian a little bit later. Before we get there, we need to talk about the financials. JP Morgan setting the tone in a major way for the whole of the banking industry. JP Morgan in the pre-market up by more than 6%. There's a lift for Wells Fargo up by 2.65%. Citi's up by close to 3%. Behind us, numbers from Wells Fargo, JP Morgan, PNC as well, just a flavor of the regionals. So far, so good. Okay, stable, Lisa. For JP Morgan, I'd go beyond the word stable, though. They raised their outlook. This wasn't just about a better first quarter. It was about a better outlook as well. At a time when I thought, I was sitting here and everyone was thinking the same thing. Isn't this the quarter where they tanked the outlook because of what's happened in the last few weeks?
Are big banks eating the lunch of the small banks? That is going to be one of the key questions of this earnings season. Are we seeing JP Morgan with an increase to their net interest income because all of the regionals are losing their deposits and losing lending activity?
And this goes back to our conversation with Timothy Adams of the IIF, essentially the big bank representatives. He doesn't like me to say that, but I think that's accurate. They really don't want to talk about this. For our international audience particularly, I can't emphasize enough how sensitive this is in America. Going back to 1833, we are uniquely different in how we revere small banks. Can't say that enough.
Well, more banks still to come, Tom. Citi, a little bit later this morning. When that drops, we'll bring those numbers to you.
What time is it? I don't know. It's
should be about 8 o'clock. Should be usually in about 40 minutes or so.
Yeah,
so we'll wait and see.
Really interesting to see. Right now with us, Anne-Marie Horton. She is our Chief Washington correspondent, of course, with Balance of Power with Joe Matthew on the themes. I'm going to paint the picture, Anne-Marie, and let you pick it up because I know the terrain so well. You come out of Boston, and there's lots of fancy homes, and then it gets to be scrub pines on the way down to the cranberry capital in the world. And down there somewhere, and you can hear the screeching planes in the late night, is Otis Air Force Base. And it is part of the fabric of a relatively poor southeastern Massachusetts between their fancy resorts where Lisa goes in the summer and the rest of Boston.
It's the longest introduction ever.
Tell us the shock.
Where are we going?
Tell us the shock.
Story are we talking
Tell us the shock of Otis Air Force Base in the last 24 hours.
You're talking about the 20-year-old leaker, Jack Teixeira, that will be arraigned today in Boston. And the questions are just now mounting on the Biden administration. This all started yesterday, remember, when the president said, we are very close to finding this individual, but he also downplayed how important this leak was, which potentially might bite the administration in the back because this seems like it is incredibly important. It is one of the biggest leaks we've seen in a decade since Edward Snowden. We spoke to Defense Secretary Mark Esper yesterday, and the big question that everyone in Washington is asking is how does this 21-year-old, for this job that feels very much almost like an IT job, the support of this base, have access to this kind of sensitive material?
So you and Joe Matthew on Balance of Power have done some wonderful coverage on this. I was watching it yesterday afternoon. I watched that interview with Esper. Anne-Marie, I think a point that the three of you made is that it's too early to draw conclusions. Is the president drawing conclusions, at least publicly?
I think what he's trying to do is just downplay the concerns, right? Politically, this is damaging. It's not the Biden administration's fault that this 21-year-old, per se, it's not their fault that this 21-year-old had access. This is an issue the U.S. has been grappling with. More people in the U.S. government have access to information since post 9/11 world. And the idea is you cast a much wider net, more intelligence to more people, potentially you can catch more threats and more issues. But now the Pentagon has a real problem on their hands, and they need to figure out what went wrong here, because Pat Ryder, the Pentagon spokesperson, said that we do have issues in place. This was an individual it was a criminal matter that he took this information. But everyone is still asking, how did this person have this level of clearance?
Well, and then there's also the implications in real time. Is the major implication as you talk with people questions about things that were revealed about the Ukraine strategy in the Ukraine-Russian war, or is this something broader in terms of the alliances and the relationships the U.S. has with data sharing and just in general strategizing together?
I think there's 2 points. One, the president said that
the reason why this leak is, the issue is important, but the content not so much, because he said it's not contemporaneous, meaning this is not present day information. But it is when you're showing information about the Russian military. Today, the Washington Post has another story based off these leaked documents about special forces within the Russian military and how they have actually been batted down. So that's one issue. Does this put Ukraine in a more vulnerable situation in the present day? The second is, obviously, what does this mean for allies? I think most allies have accepted. Remember a decade ago, Angela Merkel found out that the United States had access and was spying on her mobile phone. They have accepted that this is what the United States does. The issue is it puts leaders like the South Korean leader who is about to come to the United States for a state visit in a very difficult position. Now his opposition is saying the U.S. is infringing on our sovereignty. So in that respect, it's going to be much harder. But they're doing it, I would say, politely. But behind the scenes, people are furious.
Well, behind the scenes is really where I want to go, because here at the IMF, there seems to be a growing tension between the U.S. and Europe, and the U.S. and Europe with respect to China. And that those fissures are growing. And I'm wondering, I mean, perhaps it's a bit of a stretch to tie this in there, but is there a feeling that the U.S. and Europe are not going to be reliable allies in the same kind of way going forward about things like China, about things like trade, and more generally as they sort of work in a collective group?
Well, one, trade. The president just left Northern Ireland with Rishi Sunak, and a trade deal was not discussed. He is coming here. Potentially that'll be on the table, but this is something the UK certainly wants. But when you're talking about these fissures between Europe and the United States, I don't think this is happening behind the scenes. Emmanuel Macron has just left China, and he basically said, we are not going to line up on the U.S. stance with this. We want to have our own strategic
autonomy.
Autonomy, that was the word, autonomy in the world.
He said this publicly. I had no idea that the president liked rugby so much. Did you? I'm not convinced he knows much about it, based on some of the comments he made, but apparently he loves rugby.
The president said he prefers his children, grandchildren to play rugby over football, I guess because he thinks American football, John's here, because he thinks it's safer. But actually, if you've seen a rugby match,
this is going down in flames.
If you've seen a rugby match, rugby is incredible. I would say violent and hostile.
So in rugby, you don't have the protection.
That's it.
And the helmet and all of that stuff. And because of that, there's always been this argument that they tackle each other differently. That because it's body to body.
I have not seen that with my own eyes.
In the NFL, you would do sort of helmet to helmet sometimes, which is kind of nuts.
Some people say that some of the protective gear that you wear in American football actually allows some of the contact that causes some of the conctions more so.
Which is what
that's one of the theories.
Did you ever think you'd be talking about this?
No, I never thought that I would. And
what I would suggest?
Full disclosure, I don't really like either. I'm a soccer fan.
Okay, good for you.
John, what I would suggest is Guy Johnson is watching this in London and going, what the hell are they talking about?
He's a big rugby guy.
As is everybody
And the
else.
president's a big fan of the New Zealand All Blacks, I'm told, as well. Anne-Marie, thank you. AMH with the latest. We should play that clip sometime.
All right, let's move
Fascinating
forward.
stuff. Real expert. You know when someone tries to, like, you know, get along with the lads, and then it just sort of like, you know...
No offense to the
falls flat.
president, but
Anyway,
even I know who the All Blacks are, which says a lot.
What was he thinking? I don't know. We'll skip this.
It was
Let's
a record scratch.
Let's get back to the banks and talk about JP Morgan. JP Morgan with a big B this morning, setting the tone for the financials, and I would say kicking off earnings season, Q1 earnings season in a major way. JP Morgan absolutely flying in the pre-market by 5 to 6%. It was more than that at one point. It's not just the beat. It's not just the nature of the beat. It's a beat and a race, Tom, for the outlook.
Yeah, it is. It's leadership here for the major banks, and weeks from now, we'll start to hear from the small banks when we get a much different story.
Lupin Rahman of PIMCO joining us from the International Monetary Fund. Our coverage from the World Bank IMF spring meetings continue from Washington, D.C. this morning. Good morning. This is Bloomberg.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Equity futures just a little softer here. Looking over to New York, and the market opened about 2 hours away. The data yesterday gave this market a lift in a big way. PPI softer than expected, claims a little higher than expected, breathing life into that soft landing theme. I say breathing life. Every day you get together and you get a shifting probability around a range of outcomes. I'm not saying it's the base case. I'm just saying that the probability shifted in its favor just a little bit, and that's what was behind the lift in the equity market. Outside of futures this morning, with the Nasdaq down 0.5%. This is the bond market. 2s, 10s, and 30s look a little something like this. And let's sit on the 2-year. The range on a 2-year has been massive every single week for weeks. Last week in the 360s, north of 4%. This week, relatively speaking, a bit of calm. A 15 basis point range, something like that. We traded in the 380s a little bit. We traded above 4% a little bit. We're still around 4%, 398.74. 2 basis points higher on the session. Remember, retail sales coming up a little bit later, and we barely talked about that. That drops in about 60 minutes' time.
We have retail sales today?
Retail
Yep,
sales
I did
this
not
morning.
know that.
That's the bond market. Here's foreign exchange. Euro against the dollar. Euro dollar. The high of the year. The print came a little bit early this morning. Intraday, the high, 110.76. Right now, 110.52. We're positive just a little bit on euro dollar, but the theme over the last several weeks is clear. Euro stronger, dollar weaker. Tom, we have to talk about the bank earnings because that's setting the tone for the price action.
It's setting the tone,
Without
setting
a
the tone.
Bramo, do you want to pick up on JP Morgan?
Sure.
Absolutely flying.
JP Morgan flying up at one point about 6.5%. That's faded just a touch, but not much. 5.8% gains on JP Morgan. Wells Fargo and Citi trailing that. Citi is set to report earnings here in about a half an hour. Those shares up about 3%. Wells Fargo 2.3%. If you take a look though under the hood, what's interesting to me really is PNC came out. They delivered better than expected results, and those shares are up more than 3%. Are we seeing truly an all clear for the banks, or are we seeing JP Morgan minting money on the heels of everyone flooding into the biggest banks, while some of these smaller regional banks see incredible outflows and incredible pressure that strains the lending? And are we going to see that divergence continue as people go into the big banks and continually shun regionals?
I think it's more complex than that, and basically what it does is scope and scale in a hugely diversified portfolio. Some of what you say I think is definitely true. There can be some trends there of the big get bigger, the small struggle, and we'll see in the coming weeks. But on this conference call, they're going to do everything they can to not talk about how they're winning all their victories across many different platforms.
You don't think they want to scream and shout about their deposits?
What's their use of cash? Excuse me, Mr. Diamond, can you raise a dividend? We can't raise a dividend in this crisis right now, that kind of thing.
Well, we said it, 1-800-JAMIE, as things got bad.
Yeah.
It looks like that's what happened, and I think Bloomberg Intelligence coming into this release questioned whether this was a port in the storm, and it looks like it was.
And here at the IMF headquarters, John, I mean, let's be honest, it's a Dow Jones Industrial Average free zone. There's a sign that says that. Guess what? SPX, rounded up, 4,200. That's a surprise of 2023.
That's the top of the range. The top of the range so far, from 38 to 42, Tom.
We're going to migrate forward here out of bank earnings, John. What, Citigroup in 30 minutes, something
Should
like
be,
that,
yeah.
15
Should
minutes?
be.
This is always a joy. Joining us now, Lupin Rahman with PIMCO, head of EM, of course, her service to the International Monetary Fund for years, and far more importantly, a student of the ramifications of the central banker to the world, Jerome Powell, and EM sovereign debt. How big of an influence is Mr. Powell right now on Bolivia, on Ghana in the news today, and frankly on other larger, more successful EM economies?
Well, the Fed cycle is extremely important for major emerging markets, particularly those in the investment grade portion of the asset class. But you correctly point out that for the frontier markets that are really facing credit stresses, relatively, the impact of the Fed is relatively a lot smaller than you would expect.
It's smaller than you'd expect, but the fact is there's a multi-dimensional crisis in EM now. In your study of history at LSE of EM, how is this distress, this tension different than what we've seen back to 1992 and frankly back before that?
Well, I take a slightly different view. I actually think the crisis is more in developed markets than emerging markets for the first time in a long time. In EM, you have inflation coming down, you have growth, essentially.
And you mentioned Korea got out front with rate increases.
Absolutely. Korea, Brazil, Chile, the list is endless. And not only that, they've avoided deep recessions, whereas we have the kind of soft landing versus hard landing debate in developed markets. I think that, when we're thinking about crises in EM, it really is a select number of frontier markets that don't form the aggregate part of emerging markets that we actually invest in. And it's important to bear that in mind. For countries like Mexico, like Brazil, like South Africa, like Indonesia, we're extremely constructive. This new phase within their economies, particularly as they're trying to come out of this tightening cycle, is going to be very constructive for EM investors.
Lupin, you said this is one of the most exciting IMF meetings you've ever been at. Why?
Well, this is the first time we really have a lot of discussions on debt restructurings and, importantly, the role of the multi-development banks and China in debt restructurings. And so this time around, we're seeing a lot of debate and discussion, some pushback from China. It's the first time we're really seeing negotiations related to the MDB's senior status in debt restructurings. And the recent global workshop that the IMF held last week essentially highlighted that the MDBs will be committing more grant financing for some of these debt restructuring countries.
How much is what you were first talking about connected to this very deeply? That right now the crisis is not in the developing world as much when it comes to the rates picture. It's much more in the developed world, in frankly, US, which is the biggest market for a lot of these debt instruments. How much is that coloring the conversation and the willingness to sort of allow things to sort of just go on and losses to gather at a time that's somewhat fraught for the developed world?
So I think that, the impact that high inflation in the developed economies has on these discussions is important, but it really isn't the front and center when it comes to the debt negotiations. The debt restructuring issues are long-term. It really strikes at the heart of how the Paris Club, China, India, the GCC, Saudi Arabia are going to work together in future debt restructuring. So these are longer-term issues that I think all parties recognize the importance of really putting front and center.
Are you impressed with how the IMF has handled some of these discussions?
Yes, I think the IMF has played its part in terms of being the negotiator between all of these actors. There are elements that the IMF needs to focus on in terms of its lending into arrears and lending assurances criteria. It's really important for countries like Sri Lanka, like Ghana, who went through balance of payments crises but need financing from the IMF immediately and in a very short period of time for the IMF to really iron out some of these creases when it comes to their lending into arrears and assurances practices.
On a market desk with your 3 Bloomberg terminals in front of you, Lupin, what do you want from China to signal from China that they will do Western restructuring? What's the next step? The FT, Robin Wigglesworth, has done a great job on this. Our Enda Curran, I think, has been strong on this as well. There has to be a China process of restructuring? What's it look like?
So we're getting a lot more clarity on what China's key issues are in these debt restructuring. And essentially the first is the seniority of the multilateral development banks. And to some extent, the recent announcement on grants has overcome that. The second is domestic debt restructuring. And this is a very valid concern from the Chinese. Many countries that are coming for debt restructurings have very high levels of domestic debt, which need to be addressed. But essentially, governments find it extremely difficult to impose haircuts on their population and as well look after the stability of their banking sector. This is an issue that needs to have a lot more work behind it to really get a handle on it.
We don't have the time for this. We can go on for 3 hours. Can you do a panel with me today? What are you doing at 11:30 this morning? The heart of it to me, as Ruchir Sharma mentioned the other day, is the rescue culture. Is the rescue culture where everybody has to be pain-free? Is it seeped over to your world of sovereign debt workout? Do we want everybody to be painless in working towards haircuts or extended duration?
I think that the EM world is no stranger to haircuts and actually very painful restructurings. We've got a long history of very low recoveries in some countries and very high recoveries in others. I think that where we're going to is a shift from the focus on private bondholders to the official sector in terms of how the official sector should behave and coordinate themselves in resolving debt restructuring. So really, with the collective action clauses reforms that we saw over the last decade and a half, the private sector really is doing its part. And the issues are much more in the official and the official bilateral sector.
Always been the case. The official sector doesn't like taking losses, Tom. You know that. Look at what happened in Europe with the debt crisis there. Repeatedly, same thing.
Is the tension with China going to impinge best practices on a new 21st century IMF?
And this has been a big concern. Also, what are the rules of the road? I mean, can China say, all right, we didn't get paid back, so we're going to take your port? You know what I mean? And we're going to take your shipping line.
The jargon for this,
seriously, this is one of the big issues.
The jargon for this is they go, well, we're into meetings on technicalities. I don't know what IMF technicalities are. Lupin's expert at that.
Technicalities.
We're just hearing about that for years.
Fascinating stuff.
It is fascinating. I actually, like, some of these meetings are really fraught, and everyone talks about it's like, oh, yeah, we're coming to an agreement, and then you talk to them behind the scenes, and they're like, oh, it's a nightmare.
Yeah, they make it, publicly, they make it a bit of a snooze.
Yeah,
I
exactly.
have to admit, for me, it's
100%.
Been, it's been pretty sleepy, but the tension behind the scenes, big time.
Significant.
Lupin, this was great, thank you.
Thank you so much.
Lupin Raman there of PIMCO on the latest from the International Monetary Fund and the World Bank spring meetings. Our focus, of course, will stay on that. We'll catch up with Valdis Dombrovskis of the European Commission in just a moment. We're looking forward to that conversation. We're also going to recap the bank earnings for you. JP Morgan out of the gate a little bit early this morning. If you are just tuning in, welcome to the program. Out of the gate with a beat for Q1. A beat for Q1 and a raise for the rest of the year. JP Morgan, Tom, up by close to 6% in the pre-market. Citigroup reporting earnings in about 20 minutes from now.
And the ratio analysis is extraordinary. I'll go back to what I mentioned earlier, 18% return on equity. Those are the kind of numbers where you go, well, we'd like to talk about use of cash, but we won't this time around.
A snapshot of the financial system. The big banks are looking good relative to expectations. Lisa, it's about the regionals. It always was. Need to get a flavour of that.
How much is what we saw with deposit increases and an upgrade in terms of net interest income? The big banks eating the lunch of the small.
The big banks positive in the pre-market. Equity futures down about 0.1% on the S&P 500 from Washington. This is Bloomberg.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. The U.S. government is struggling to explain how a 21-year-old man in a junior post was in a position to allegedly leak a massive trove of classified U.S. documents related to the Ukraine conflict. Jack Teixeira, a cyber specialist for the U.S. Air Force National Guard, was arrested in Massachusetts and is scheduled to be arraigned in U.S. District Court in Boston today. The New York Times reports he was the leader of a gaming chat group where the documents first appeared. In a testy public exchange with her Chinese counterpart today, Germany's foreign minister said Taiwan's destabilization would be a, quote, horror scenario, and any change in Taiwan's status would be unacceptable. Beijing has ramped up military drills around Taiwan in recent months. Meanwhile, China warned about the risk of falling debris near Taiwan this weekend following a planned satellite launch, denying Taipei's claims that a no-fly zone will be imposed to the north of the island. OPEC Plus production cuts are likely to drive up oil prices and inflict more pain on consumers already squeezed by inflation. That's according to the International Energy Agency. It says global oil markets will tighten more than previously expected, forcing hefty inventory withdrawals of about 2 million barrels a day on average in the second half of the year. Hermes quarterly sales jumped as the maker of Kelly bags continued to see strong demand from Chinese customers. The luxury label says first quarter revenue was up 23% at constant exchange rates. Analysts had expected a gain of 16%. Those shares rose as much as 2% in Paris at the opening of trading. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Not really seen evidence at this stage suggesting a contraction in credit.
We have seen a couple of data releases that have shown a certain amount of tightening in credit underwriting standards, as well as in the overall level of credit.
You're being kind, because I think she said she saw no evidence of lending contracting, and you've said we do.
Yeah, absolutely. There is certainly evidence in the data of some contraction in lending and some tightening of lending standard.
Treasury Secretary Janet Yellen contradicted by Tobias Adrian, the IMF Director of Monetary and Capital Markets. And that's been a theme, a feature of these World Bank IMF meetings this week. The IMF with a gloomy outlook and the pushback coming from elsewhere, whether it be Chancellor Hunt to Bloomberg a little bit early this week, speaking to Maria Tadeo, or Tom, from Secretary Yellen herself, suggesting that things aren't that bad, the economy's still doing well, and the evidence that we all see of contracting credit based on the data we saw on Friday. Tom, she's not going to acknowledge it.
It's always there, but it's more accentuated this time. That's what I would say, and I'm trying to. There's multiple whys to that. We don't have time to go into it, but the political tensions here are different than any other meeting I've been to.
I'll pick one why: politics, and perhaps we can leave it at that and pick up on it.
Well, it's politics, but it is the geopolitical the set of geopolitical tensions that are out there.
Tom, we're about 10 minutes or so away from Citigroup earnings. I just want to touch base with a price action really briefly. Sure. Equity's still negative on the S&P 500 by about 0.1%. But if we can check out the big banks just briefly, if you are just tuning in again, welcome. You missed it. JP Morgan up 6% in the pre-market. It's a beat on the first quarter. It's a raise for the outlook as well. The guidance pretty decent at a difficult time, we thought, for the financials. A not so difficult time, Tom, for the major players.
It's going to be interesting to see, to say at the least. What we're going to do here is move to the banking earnings, but right now stay in a very delicate discussion. This is a bilat. That's what they call it down there. We're going to have a bilateral right now. That's where two parties that really don't want to talk to each other. We're going to do that with Valdis Dombrovskis, European Commission Executive Vice President, the former Prime Minister of his Latvia. The bilats you go into now across the Atlantic Ocean with select American officials, is the tension normal back to your prime ministership with Latvia in the heart of the GFC? Or is there something new this time about transatlantic bilat tension?
Good morning. Well, first of all, I would highlight that there is a very strong transatlantic cooperation. We are strategic allies, and especially in times like this, where we are confronted by Russia's aggression against Ukraine, by war on European soil, we need to work together with US and with the entire democratic world. So, and I would say that this cooperation, both in terms of supporting Ukraine, putting sanctions against Russia, is very strong and very good. On trade side, obviously, we are also having very extensive agenda. This was subject of some of my meetings also yesterday, and there we are still working, for example, on some of the discriminatory aspects of the U.S. Inflation Reduction Act. But once again, we are constructively engaged with U.S. authorities and hope, to the extent possible, solve those issues.
From Latvia up to Estonia, over to Finland, in your world and all of our worlds have changed here with Finland joining NATO. To me, it was just a lifetime shock to see that. How do the political dialogues you're in every day change, given the shock of this war of Finland simply moving from its independence and joining Europe?
I think as regards Finland, it obviously was a logical choice. If you live next to the aggressive empire, you need to seek stronger protection, and that's what Finland did with joining NATO, and hopefully Sweden will be able to join soon as well. And it definitely strengthens the security in entire Baltic Sea region.
Commissioner, you're always diplomatic. I would suggest that you've had to spend the week putting out fires. Fires started by someone else. I would like to understand how the Europeans would respond if the US administration turned around and said that they don't want to get caught up in crises that aren't ours. What would you say back to that?
Well, as I was saying at the beginning of interview, when we are confronted with major challenges,